From an active investor that has a stake of about 2% in Smiths. It's an engineering company, and the US activist investor Engine Capital is calling for a breakup of that business. So watch that stock as well at the open. Guy.
Tom, Stock 600's up around 1.7% over the last 4 trading sessions. Do we continue that into the Friday session and have a really strongly positive week? Short term, certainly markets may be feeling a little bit better right now. Time for the opening trade. Let's show you what is going on. Let's give you some numbers. FTSE 100 out of the gate up 0.2%. IBEX is up by 0.3%. We'll see what this rally looks like and how much pace it can gather. I'm really interested in the component parts of the FTSE 100 today to see exactly what is going to be the dominant narrative. Is it the retailers? Is it the banks? Is it the mining stocks? Look at what's happening with oil as well. Let's fold that back into what is happening here too. You've got the Stock 600 up by 0.2%, but as you can see, the FTSE's up by nearly 1% already at the get-go this morning. The CAC 40 continuing its run yesterday. Luxury was a really big theme yesterday. That has maybe continued today. We're up by around 0.6%. We'll wait for the Swiss. We'll wait for the Germans. Tom, what's going on with the sector story?
Basic resources at the top of the list right now. So gains of more than 1%. Glencore is certainly a factor there. Energy, as you say, looking at 4 straight weeks of gains for oil prices. Above $80 a barrel on Brent right now. Energy as a sector is up 0.8%. Is now the third biggest gainer across your sectors. Utilities is near the top as well with gains of 0.8%. On the downside today, at least for now, we'll see how the pricing comes through. Tech is down 0.5%. Travel and leisure also just marginally in negative territory. But it's basic resources that are currently leading the charge then, Guy. On the FTSE 100, you do have miners like Glencore now up 2.5%. The house builders as well. This will be linked to ramped up bets that the BOE will have to go further with the rate cuts. So they are benefiting on that. Taylor currently up 2%. Persimmon also gaining 2%. And by the way, Anglo-American going back to the mining space, also gaining around 2%, Guy.
You do wonder whether Anglo's back in play. You put that kind of story back on the table, the mining consolidation story, and you do wonder whether Anglo is going to be under pressure. The FTSE 100, let me just go back to the FTSE 100 on my screen. The FTSE 100 has got 96 stocks up this morning, 3 down and 1 unchanged. It is a positive picture. Miners are up. You've got, as you say, Smiths on the rise. There's also the banking story that looks like it's getting a little bit of a boost here this morning. Barclays is up by 1.5%. So you're certainly seeing that narrative coming through as well. You've also got the pound lower, so that's a factor you want to put in. But actually this morning, a fairly decent mix in terms of the domestic, non-domestic stocks moving higher for the FTSE 100. In terms of the Stock 600, what are we seeing? It's actually a very similar picture to what you've got in London. Smiths, Glencore, Entain are the biggest gainers on the market this morning. Some of the shipping stocks are showing a little bit of weakness this morning. But on the Stock 600, the breadth is pretty positive as well. 502 up, 85 down, 12 unchanged.
Linking to what we're seeing in the home builds in the UK, yields down then, 5 basis points at the front end. The 2-year here in the UK, 4.32 right now on the gilt 2-year. The 10-year, 4.62. Yields also lower by 5 basis points. So across the curve, you're seeing money moving into the sovereign debt of the UK, yields down, price up. And that is one of the factors leading to the upside that you're seeing in terms of the home buildings. So let's get more in terms of the market analysis then. Max Kettner standing by. Guy, you're going to bring him in.
He is. Is he bearish? I'm trying to think of the last time I can think about Max Kettner being bearish. Did I misread your note this morning?
No, I think we were tactically quite cautious because we were entering what we call this danger zone on rates, so yields ever going higher, and that of course was sort of threatening. Okay, if we get any kind of more hawkish data, CPI a bit above expectations or retail sales above expectations, are we going to move to a world where the market will have to price in even a higher probability of rate hikes for next year, or even perhaps push it back into 2025 and see a probability that the Fed may already have to hike this year. And that, of course, equity spreads, risk assets overall don't like that at all. We've always got to remember, for risk assets overall, it's pretty binary. And we've learned that in the last 2.5 years, right? We all have always these conversations around, oh, how high of yields can we have until equities go down? The reality is, it's so simple. It's like, well, as long as they cut, it's fine. We're all happy. It's like, yeah, but instead of 7, it's now 4 cuts. I'm like, yeah, whatever, fine. But it's really the moment when we go, oh my gosh, they may not be cutting. They may actually hike. We've seen that in the last couple of weeks.
Are we still at that point, or do you think that point has gone?
I think that point's gone away. The point's gone, right, in the last 3 days.
So your risk on now?
Yeah, I mean, we've never really changed. All we've really said was, okay, now is the point where you probably want to put on some hedges. You want to be like, you want to put on a Russell short for a month and be like, oh, if this thing really, goes towards 5%, if 10s really go towards 5%, we can see another couple of percent down. But it's not really the time to say, oh my gosh, I need to be properly bearish now. Because always remember, with yields, the issue with yields is it's sort of self-defeating. So what we call that danger zone, it's not something where you go in and then you'll be rattled for months and you'll be like, oh my gosh, this is never going to end. No, it's kind of self-defeating, because you go in, and as yields move ever higher, obviously what we have is people, you get more and more people really scared about the impact of higher yields, the impact of potential rate hikes on growth, on risk assets. Equities go down, VIX goes to 30, 40, and what do you do? Well, you buy bonds to hedge against it, and yields go down again. So by the very definition, it's all kind of self-defeating.
One of the big corporate stories at the moment is the Bloomberg reporting about a potential tie-up between Rio Tinto and Glencore. Just to get into some specifics around corporates, there's a line crossing right now on the Bloomberg terminal. Rio Tinto, Glencore talks said not to be currently active. Again, this was Bloomberg reporting that they had considered a tie-up that would have been the biggest deal in mining history. The line crossing just in the last minute or so, Rio Tinto, Glencore talks said not to be active. Miners are up as a sector in the UK. The FTSE 100 is gaining again. A solid session for the UK. Yields are down. Max, do you buy the UK?
Globally, no. I'd still be buying, the US over pretty much everything. I know it's super consensus, US exceptionalism and all that. I'm sure you hear that about 100 million times a day, and you're like, oh, great, Max is going to tell us the same story that we've heard about 10 times already today.
Which parts of the US then?
I think it's banks are really great.
Because you're going short Russell 2000
yeah.
right now. Okay.
Look, the Russell is an incredibly good short. Because the problem with the Russell is, historically, you've got all these these materials and industrials, and it's all this early cyclical stuff. So you'd think, hey, if the US is really doing well, you want to buy the Russell because it's geared towards domestic growth. The reality with the Russell nowadays is you've got 42% of the companies that sit on negative earnings. You don't want to buy that. So if you're wrong on growth, you get absolutely smacked. And the issue is that almost 40% of the debt in the Russell is also on a floating rate. So think about the two tail risks that you've got. You're either going to be wrong on growth, and growth is not going to be as strong as you thought, or you're going to be wrong on rates, and growth is much stronger than you thought, and yields are going higher. So in both of those tail risks, you're going to lose out with the Russell.
Okay, that's the call on the Russell. What do you buy then? Don't say Mag 7.
I buy Mag 7. I wasn't going to say it, but just because you said don't say it, I was going to say it.
Would you increase your holdings in Mag 7 right now?
Yes, I think so. I think, look, the reality is we are seeing already productivity gains in the S&P 500 driven by AI. So I know there's a lot of skepticism. I know there's a lot of skepticism around evaluations, around monetization. The reality is when you look at the S&P and you look at revenue growth, right? You look at revenue growth in the US, you compare it to cost of goods sold growth in the last year and a half. There's actually been a gap opening up between those two. Those lines usually follow each other, right? Which kind of makes sense. You sell more while your costs go up proportionately. Right now, in the last year and a half, you've seen a gap, a wedge opening up between those two. So you're already seeing that actually companies are starting to sell more, but without the proportional increase in costs. That is already productivity gains.
Are earnings going to be good? Yeah. Are earnings going to match expectations?
Yes. Oh, yes. I think, with earnings, we have this perpetual thing, at least for the last 2.5 years, where consensus says, oh, yeah, I get it, last quarter was better than expected, but I'm not going to change my full-year forecast, so therefore the next quarter has to be worse. The setup that we've got right now for Q4 is that virtually all the sectors are down quarter on quarter in terms of expectations, except for tech. And let's bear in mind that tech is mostly an NVIDIA, a Mag 7 story, and a story around the Christmas bump. Because we always realize on the 23rd of December that, hey, I haven't bought my Christmas present yet. How about an iPhone? It's like it's this sort of Christmas seasonality that we've got in tech.
Your Christmas list. That sounds fantastic.
Yeah, I got a lawn. I got a lawnmower, as you know. No? But I guess
you give yourself the lawnmower.
I did. Well, no one else would do it.
No, perfectly reasonable Christmas present in my book.
Is it? Okay. I mean, I did throw the hint on Guy, but he didn't.
I didn't. No, I knew you were going to get one, so I didn't bother.
No, but on the earnings, look, the overall index level in terms of earnings expectations is virtually flat quarter on quarter. When we look at year-over-year earnings, of course it looks high, but that is because the last 3 quarters we've seen growth. So it's just base effects. The reality is that virtually all the sectors, consensus says, oh yeah, they've gone down quarter on quarter. As long as that pattern on earnings expectations continues, that you got positive surprises during a quarter, but then consensus says, that's fine, but it doesn't change my picture of slight skepticism, so therefore I need to revise downwards the expectations for the next quarter, and you head into the next season with revised expectations down. You're going to play this game in perpetuity. Once that pattern stops, once consensus really says, right, we acknowledge we've been wrong and earnings are genuinely strong, we're not going to revise our expectations. That is the point then where you can fundamentally be bearish. Up until that point, it doesn't work.
Fundamentally be bearish. At some point that will happen, I promise you.
Are you fundamentally, you're not fundamentally bearish?
No, not at all.
Well, not at all in the US. What about the Eurozone then? I mean, if we get to, we're on 102 right now, euro dollar. You get to parity is a call from some. If we get there, how beneficial is that potentially to the corporate earnings?
It's very beneficial.
Being overlooked by the markets?
Yes, it is.
Cheap euro, the benefits for corporate earnings in Europe.
I definitely think it is, because when you look, for example, at the DAX, or look at last year, look at GDP growth, actually globally, look at the largest countries and the largest indices in the MSCI world, and look at it versus GDP growth. Look at Europe, look at the largest European countries versus equity performance last year. The R squared, the explanatory power, the correlation between the two, 0. Absolute 0. So if you had been last year like, oh my God, Germany, it's looking cyclically so stretched, and blah, blah. Well, the equity market was 20% up. Why? Because it's got SAP, it's got Infineon, it's got Rheinmetall, it's got Siemens Energy. So it's got all those companies that have really high shares of foreign revenue. So they're looking at this now and they're like, I'm loving this. So the reality is going forward, I mean, the lower euro really helps, particularly for the DAX.
Does the same rule apply in Europe as the one you set out at the beginning with the US? As long as rates are being cut, you buy the market?
Yeah.
So that rule applies universally?
Pretty much, yeah.
Just talk about the rest of the year, just in a little bit more kind of broader terms. Namir is out with the call this morning talking about 6% yields in US 10 years. T. Rowe Price is already talking about 6% yields as well. The risk, that we were talking to somebody else about this earlier on, the risk is that we see a range of, let's call it 3 to 6% on a US 10-year this year. How much volatility does that imply for equities if we swing around between those kinds of numbers?
I don't think that is possible, though, particularly not on the upside in yields, because, again, that upside in yields is capped. It's by definition capped, because you can't go in, let's say we're now at give or take 460 on the 10s. We can't go 140 basis points up and say, oh my gosh, that's going to be really bad for equities and spreads are going to widen. Yeah, but the result of that is financial conditions tighten, negative wealth effect, people get scared about a growth shock, about a growth scare, just like we had in July and August. It works for like 2-3 months. Think about last year.
It's driven by issuance, though, doesn't it? It depends if it's driven by...
But then it's even worse, because then you could say, okay, that's only... Think about it. So what could drive yields higher? We could have higher break-evens, higher inflation expectations. You're long equities, you're long a nominal asset class, great, right? Like, I don't care. Real yields go higher because growth is much better than expected. Yeah, I don't care because
That's what inflation is.
You know,
you've got to fold inflation into that argument to make it.
But the thing is, right? Like, let's say if inflation expectations go higher, you're long a nominal asset class with equities and credit. You don't care. If real yields go higher because of better than expected growth, earnings growth is higher than expected, you don't care.
Long duration assets go down like tech?
But I'm not sure, because the last two years, I mean, in reality, real yields went massively up, and that correlation no longer works.
Do you think it's impossible that we get to 6%?
It's to me, I don't really see a way, because it stokes, you know, that is a natural cap in that danger zone. It's so self-defeating that people basically get scared about the growth or the impact on growth, the impact on earnings. You know, let's be honest. Once you get to something like the 18th of December with the FOMC meeting, VIX blows up to almost 30. People are already like, oh, you know, how high of yields can the equity market stomach? We can't go up 140 basis points from here in a straight line and think, oh, equities are going to go down in a straight line 20%, but no one's going to buy bonds to hedge it. They're all going to look at them like, oh, I lost another %. But why would I hedge with bonds? No, that doesn't work. Of course, people are going to get scared. I'm like, oh, we're now at a level of yields where it's really choking risk assets. So the negative equity bond correlation is firmly back. Let me buy duration to hedge for a growth scare. And that naturally brings yields down again. So I don't think it's possible.
It's all good. We're out of the danger zone. Max, great to see you. Chief Multi-Asset Strategist at HSBC Global Research. Thank you very much indeed. Core 6 looks like this morning. Let's figure out what's going on in terms of the single stock story. A fairly mixed picture, as you can see. Luxury's kind of holding in there at the moment. You've got a decent bid in Schneider. Novo's a little soft, though, which is interesting. Miners absolutely front and centre in the London market. Joe Easton's back with us. What do you got?
So as you say, Guy, miners really at the front and centre of this market this morning. Now, we did see these stocks gaining at the open, including Glencore. We're up around 3 or 4% at the open. But then we got those headlines that you mentioned about how there are not currently talks ongoing between Glencore and Rio. So we've seen the stocks coming down very slightly, particularly in terms of Glencore. We're trimming that gain. But it's clearly a case of no smoke without fire in terms of this M&A situation coming back into the mining world at the moment. Anglo-American, as flagged by JP Morgan, and you guys on the show earlier, that is potentially now back in the crosshairs of maybe another deal. Will that come through? Will there be speculation around that? But clearly a big part of the market at the moment. Then in terms of that UK data, really interesting, because we are seeing the retailers weakening, but it's kind of a bad news is good news story on the yields, on the pound. So we're seeing the likes of Taylor Wimpey in the home builders coming back up, because gilt yields coming down once again, like we saw with that inflation data earlier in the week. So therefore, the interest rate outlook actually getting better ahead of the Bank of England meeting next week, and the rate-sensitive stocks are gaining. Then in terms of Smith's Group, we have got news of an activist, a US activist, saying the company should be broken up. Now, Citigroup just put out a note on this saying that they actually agree with that, and they think the valuation is really too low on Smith's Group. We're seeing that reacting on that for the UK engineer, up 3.5% at the moment, doing pretty well on that one. Then in terms of the gambling stocks, the bookies, we did get a report out of Evoke. Now remember, this used to be called 888. It's the 888 operator, saying they've done really well in terms of their last quarter. Now, we have seen some updates recently from the likes of Flutter saying that they didn't do well because everyone was winning too much money on the US sports like the NFL. But we're not seeing that from Evoke, and therefore we're seeing that stock coming up 7.5%. And Tane also rising as a read across for the gambling stocks today. Then finally, in the ratings changes, the Dutch chemicals group IMCD, that's an overweight at Barclays today, seeing a decent gain in that one and a nice price target on that, some upside, 2.8% in terms of the move today. And Vivendi downgraded. Now, that stock was down around 2.5% at the open of trading, but it's come back up recently. Now, HSBC cutting. This is after the company was broken up. They spun out Havas, Canal Plus, and now not so much value in that. It's coming down, ticking back to unchanged. But Vivendi in France downgraded to hold from HSBC this morning.
Joe Easton from our equities team, thank you very much on some of the stocks on the move this Friday. Coming up, we're going to check back in on the Rio Tinto and Glencore story. What would a potential tie-up mean for the sector? We know now that they have been talking. Talks currently are on hold. We discuss that next. This is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power, live around the world, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Minutes into the equity session this Friday, let's take a look at some numbers and give you an idea of what is going on. London is outperforming, not by much, but a little bit this morning on the back of a mining story that we'll come to in just a second. But the CAC 40 is up by 0.7%. Most main markets around Europe up by around 0.5%. Remember, this is the last trading day of the Biden administration. It's a holiday on Monday. We've also got the inauguration on Monday, and then we're into the executive orders, which may or may not upset these markets. So kind of an interesting session, potentially quite quiet. But there's a lot to look forward to over the next few days. In the meantime, though, we've got plenty of news that we need to be talking about. As I've mentioned, London is being driven this morning by a mining story that we broke. I say we. Bloomberg broke. Mark Burton broke. And his team. Some fantastic coverage coming out on this story. Here's the narrative. Rio, Glencore have had talks. It looks like those talks are now not active, but it kind of sets up the idea that maybe the M&A story is back and ever present, you could argue, maybe a little more now than it has been in the past for the metal sector. So let's bring Mark in. What do we know about why this deal is not going forward? We know that talks happened. Why are they not now going anywhere?
It has, as you say, been a very busy 24 hours for our mining reporters and our deals team. It's a very frenetic period for deal making in the mining sector generally, and across the industry. You can see that miners are sizing each other up, perhaps nervously looking at their own portfolios as well, It's a great time to be doing deals in the mining sector in some sense, but it's also quite a difficult period to get deals done. If you look at copper in particular, which is the commodity that has really kind of motivated a lot of the renewed interest in deal making, prices are fairly rich on both sides of the investors in any potential deal will be keen, if they're the acquirer, not to overpay for the assets. If they're the acquiring company, investors will want a very sort of fulsome price for the copper in particular in their portfolio. So there's a very high hurdle to get any kind of deal done at this point in time, but undoubtedly a lot of interest in doing so.
How would this deal be structured if it comes through? What are the potential challenges? There's the coal assets of Glencore, then there are the prized copper assets. What are the different scenarios that they could be looking at?
Yeah, so it's something that we're continuing to report out, the coal assets. I think there's a kind of a strong likelihood that Rio wouldn't have much interest in them, given its prior exit from coal. More broadly, though, you could kind of think about some of the hurdles as being centred around the difference in company culture, the difference in commodities, and the difference in geographies as well. Yeah. Glencore, obviously.
Just 10 seconds before we jump on to Charlie and talk banks. Does the lack of an RNS statement this morning imply that they kind of don't want to put a statement out that could potentially restrict them doing a deal further down the road? Is there an inkling within the lack of a statement that maybe a deal is still a possibility?
I wouldn't want to make any kind of major assumptions about it either way, but what I would say is that the interest in deal-making continues across the sector. I don't think anyone wants to rule anything in or out at this point. So we will continue to report it out, and we'll see.
Mark Burton, thank you very much indeed. We continue to watch that story in the mining space, of course. Switching focus to the banks. Bank of America beating expectations for a fourth quarter profit, with investment banking fees hitting their highest in 3 years. Morgan Stanley, meanwhile, also seeing profit for the period, more than doubling, driven by strong trading revenue due to volatility around the US election. Let's bring in Bloomberg's Charlie Wells, who's been following all the banking earnings for us this week. And they have been solid, haven't they, Charlie? What stood out to you from these numbers?
You know, I'm going to say that the fourth quarter for banks was the definition of a blockbuster. And I know we say blockbuster all the time, but I mean that in the exact definition, in that there was something for everyone in this quarter. There was, rates that really cooperated for those Wall Street businesses. It kind of enticed deal makers back to the table because financing costs were lower. We had volatility, which really boosted the traders. Goldman's equities team had their best year on record. And we also, for the American consumer, had a really strong economic background. And a lot of these executives talked about how, that strong labor market means that Americans have jobs. And when they have jobs, they can pay back their debts. So something for everyone in this quarter.
Why is Citi cutting jobs then, if the numbers all look so good?
Yeah, I mean, it's kind of a tough, juxtaposition here. They announced that they're going to have $20 billion in buybacks, but of course, they said that they're going to set aside $600 million for severance in the coming year. People familiar with the matter told Bloomberg that even this week, when they were announcing these blockbuster earnings, teams were being cut, MDs in wealth and tech were being cut. They're in the middle of a transition, right? They're in the middle of a 5-year transition that Jane Fraser has got to implement. And one of the issues here really has been efficiency. So when you look at return on common tangible equity at Citi in 2024, it was 7%. You compare that to JP Morgan, and it's a tough comparator, it was 22%. But they've really got to focus on efficiency. One way they can do that is to invest in technology, but also cut these roles. And they have said they're going to do that. They've said they're going to cut 20,000. Last year they cut 10, so they're about halfway through.
Thanks for catching us up, Charlie. Great stuff. As ever, busy week for Charlie Wells, looking at what is happening with the bank reporting season, which kind of kicked off the US reporting season. So far, certainly so good. What are we going to talk about next? Scott Bessent preaching dollar dominance on Capitol Hill yesterday. Very much on board with the idea that the dollar is the world's reserve currency. But it does, of course, face accelerating challenges. Deanna Choi-Lever from Inodo Economics joins us next to talk about all of this. That's next. This is Bloomberg.
You missed it on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center will be extremely important in channeling global investors.
Don't miss the China Show live every weekday.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
The Treasury Department plays a critical role in protecting American national security. We must secure supply chains that are vulnerable to strategic competitors, and we must carefully deploy sanctions as part of a whole-of-government approach to address our national security requirements. And critically, we must ensure that the U.S. dollar remains the world's reserve currency.
Scott Bessent, Donald Trump's nominee for Treasury Secretary, speaking at his confirmation hearing Thursday. Broadly, he seems to have sailed through that process, at least. There seems to have taken a big step forward to having that nomination confirmed as the U.S. Secretary of State, incoming, of course, taking over from Janet Yellen, who is currently the Treasury Secretary. Views on China, views on the dollar, views on the importance of making sure that those tax cuts are pushed through and reinstated. They're set to run out at the end of this year, saying that if they aren't, that would create a financial crisis. But on the dollar, we heard from him there. He was pretty firm on this. He's aligned with Trump on the importance of ensuring that other countries don't try and de-dollarize. I wonder if there's a tension point there, because he also talked about increasing sanctions on Russia. One of the reasons why you want to have less exposure to the dollar is so that you're less vulnerable to those kind of sanctions.
He was also pro-tariffs. Can you have a weaker dollar, which in some ways is what the Trump administration would also like, and have a very strong tariff policy? That just seems contradictory to me. So there's all kinds of contradictions caught up in this entire process. A new report from Inodo Economics and the Asia Society Policy Institute says the US must adapt to retain global financial leadership as challenges to the dollar-based system from China and the Gulf accelerates. Joining us now, Dana Choileva, Chief Economist at Inodo Economics. How big is the challenge? How great will it be? Scott Bessent could be the Treasury Secretary for the next 4 years. How big a challenge is the dollar going to face in that period?
It's a big challenge, and you mentioned sanctions as one of the driving forces, but also it's China's desire to de-dollarize full stop. It views it as an existential necessity. And importantly, it's technological advancements. China is ahead of the game when it comes to mobile technologies, mobile payment technologies domestically. But now it's on the cusp of also leading the full transformation of payments in international cross-border flows. And why the Gulf is important in trying to figure out how this will impact the dollar is because the oil trade, the petrodollar, that's about 1/5 of the dollar-denominated global trade. So if there is a shift in that part, it will have huge consequences.
So one of the costs of the US becoming energy independent, it doesn't rely on the Gulf anymore, is that the Gulf now relies on China, and therefore that relationship potentially gets stronger as China becomes a more and more important customer for Gulf oil. And therefore that relationship, as it becomes more solid, accelerates the de-dollarization process. Is that the right way of thinking about it?
It's more interesting than that, because China's already taken that #1 spot in terms of a consumer of Gulf oil. But China's lead in certain technologies really aligns very well with the Gulf's goals of diversification of their economy. So there is a natural synergy between the two countries' regions. If we look at the Gulf as a region, obviously the key economy there is Saudi Arabia. And they've already intensified the cooperation outside of oil, both in terms of technology, but also in terms of the Gulf looking to invest deeper into Chinese, both the economy, so foreign direct investment, as well as financial markets, but also China being willing to support the Gulf's modernization strategies and goals.
Are these the key differences with the BRICS aspirations then? Because there's been a lot of historical hand-wringing about the BRICS trying to de-dollarize. It hasn't, frankly, happened. But these are the differences that you see now, quietly, to some extent, behind the scenes, the Gulf and China.
So, when you look at the BRICS, I mean, Russia has fully de-dollarized. So individually, when you look at the BRICS, all of them, it's kind of a coalition of the unwilling. All of them want to de-dollarize. What's clearly and highly unlikely to materialize is a BRICS currency. That's out of the question, not least because, take, for example, China and India are not allies. But also, why would China spend so much effort into leading the fray, in creating its own sphere of influence that, in financial sense, is based on the yuan, to then relinquish all that to some sort of common currency among a bunch of countries that have very little in common? So a BRIC currency per se is out of the question. However, what is very different is how are these countries going to trade between themselves with China? What currency are they going to use? What payment rails are they going to use? Because at the moment, not only do we have the dominance of the dollar in terms of a reserve currency, which actually is 3 different aspects, but we also, I see you wondering.
Well, no, there's a lot to unpack. There's a lot to unpack.
I know it is, yes.
You're unpacking it with your usual skill and deft. But the US response, they're not going to take this sitting down. Clearly, this has been a topic of interest for Trump, and now we're hearing from his incoming Treasury Secretary nominee. They're not going to. What's the response from the US going to be to this?
Well, look, it's clear, I think, from what we've heard so far, that the response is going to be a focus on tariffs. It's highly unclear as to, what constitutes moving away from the dollar. How is that measured? What is it that, triggers what type of tariffs? But also the issue that you brought up, how are tariffs different from sanctions? And in the context of all this, it's always about punitive measures. We're going to punish you, rather than inclusive measures. How are we going to create a dollar-based, it's not going to be the whole world, but a large enough dollar-based trading bloc to be able to withstand the Chinese push? So I see the world bifurcating into 2 spheres of influence, a China-led yuan-based and a US-led yuan-based. And at the moment, everyone else wants to have their cake and eat it. But this administration now coming in will push them to make a much more obvious choice.
Okay.
And when you're doing that, you have to offer some carrots, not just sticks. So that's my worry of how this will unfold.
Let's just talk about this in terms of levels. What does this mean for the dollar's valuation? Does it imply, if you take the story around the petrodollar out of the equation and the Gulf trades with China, does that imply a weaker dollar? Does the tariffs imply a stronger dollar, because that you would have thought would go the other way. Generally, that's the way that equation works. If there are carrots being applied, does that imply a weaker? Put this all together in terms of a Bloomberg Dollar Index. What is it going to look like as this process unfolds? Is it stronger or weaker from where we are now?
Well, look, first of all, I think just to make the point that both Trump and Scott Bessent don't seem to put the need for a weaker dollar very high up in their priorities.
Okay.
You know, what we've heard yesterday in particular, but also look at what they've said before. So clearly here it's protecting American interests. It's looking at the issue through a nationalistic lens, and it involves still very much industrial policy, though changes in that industrial policy, you know, being de-emphasized significantly. So within that, really, I think what will drive the dollar is how will the U.S. economy perform in response to the new administration's policies. That will be the key driving force on the dollar side. It's not going to be, if you'd like, first of all, the administration is not going to try and influence it directly. But what they're going to try and do in terms of in terms of tariffs, is not, compatible with a weaker dollar. But simultaneously, on the other side of the equation, China is not keen on significantly weakening its currency. Yep. It will be the last resort. And the reason why they're not keen, outside of macroeconomic issues, and the fact that actually it's not particularly overvalued, to be honest, on our estimates, is the geopolitical side. They have tried to present the yuan as a stable alternative to all those countries that are now mulling it over, whether they're going to go with China or the US. Every single crisis, whether it's the Asian financial crisis and the global financial crisis, they haven't devalued. Why would they do it now when it's even more critical for them to ensure that other countries opt for the yuan and not the dollar? So do they have the ability, of course, if flows push, if there is a pressure on the currency, do they have the ability to defend it? Yes, they do for about a year and a half if we have a very significant downward pressure. Yep. But then in a year and a half, a lot can happen.
Better leave it there. Time beats us. We've covered a lot of ground. I still feel there's more to do. We haven't even touched on the Chinese data, which came out overnight. Yeah. We'll get Diana back. We've got much more to talk about. Diana Chorleva, Chief Economist at Inodo Economics and Senior Fellow at the Asia Society Policy Institute. Thanks very much indeed. We're going to carry on the conversation. It is Inauguration Day on Monday. It's, of course, a holiday as well. We've got what could be a very active start to next week. We'll try and set you up for that. We'll talk about it next. This is Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice then to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back. Happy Friday. Now, Brexit architect and Reform UK party leader Nigel Farage, of course, says Elon Musk is a force for democratic good. He also described him as a hero, but he said he should not be seen to be dictating what the US Treasury Department do. Here's some of our interview with Farage.
In America, you know, billionaires have more influence over society than we do in Britain. There's no, culturally, there's no question about that. Musk is a very powerful figure. Of that, there's no doubt. But I also think he's a hero. I mean, if you think back to the last election in 2020 in America, where the Hunter Biden laptop was there, the evidence was clear of criminality, for which he's now been convicted of one or two things. The evidence was, I mean, all sorts of things were there that deserved to be in the public domain, especially his father's close relationship and telephone calls with various companies.
That's a separate issue.
No, it isn't. No, it isn't at all, and I'll tell you why.
Yeah.
All the social media channels forbade any conversation about that subject. The Americans had an election with no debate on this issue. Musk has come along and bought Twitter, albeit for quite a high price. And free speech is coming back to America and the Western world. You've even seen Meta in this week. I mean, an extraordinary U-turn that has been made. So Musk is a force for good in terms of open democratic argument. When it comes to power and influence, I think the important thing is he mustn't be seen himself to be dictating what the Treasury Department do, and that is important.
A lot of people would disagree with the point around, freedom of speech. Particularly the Europeans are deeply concerned about misinformation.
Anything we disagree with is misinformation. I know. Yes. We must all support globalism. We must all support open borders. If we don't, it's misinformation. I don't buy it.
Okay, that was Nigel Farage, leader of the UK's Reform Party, speaking on the Bloomberg UK Politics podcast to Caroline Hepker. And Caroline joins us now. So the conversation about the relationship with Musk, which is complicated now for Nigel Farage, but a key question as well about Musk's influence, not just in the US, but internationally as well.
Yeah, I thought it was very interesting, actually, that Farage, who obviously has advertised his close ties to Trump and sees clearly some political benefit as well as just the personal relationship to him and to Reform UK of that relationship. He's treading quite a fine line, and he's obviously been a little bit burnt because of the falling out that they had, this rumoured $100 million donation to Reform UK from Elon Musk, and then Musk calling for his removal as the party leader. So I think it's quite interesting that actually he's even making a statement about Elon Musk and his role, what it should or shouldn't be within the US government. He also talks about Doge, which I think is relevant both to the US and the UK. This is the project of Elon Musk, appointed by President-elect Trump to try to make the government in the US more efficient, and how actually Farage says that if Musk is really focused on this is going to have big implications. Are human beings going to be out of a job? He makes that argument that AI is going to take those jobs away, and that's not just in the US, but here in the UK, he says that could actually be the next big fight in Britain with the unions.
Okay, well, let's turn our attention to the UK and his economic policies for the UK. There is a lot of concern that there's an absence of policy, you could argue, in some ways, from reform at the moment in terms of what economic policy would look like. But the nearest comparison seems to be with Liz Truss and the policies she was pushing forward. How does he push back against that?
Yeah, the manifesto that they proposed pre-election was very thin, you've got to say that. Very little detail, actually, about what their economic plans are. And yet they won 5 seats in Parliament. They won 14% of the vote. Yep. This is the first time in 30 years that Nigel Farage actually has a seat in Parliament. So I wanted and spent quite a lot of that interview with Farage talking to him about the economic policies. I think the big question is, why is this different from what Liz Truss offered? You know, they are offering very big tax cuts, and then promising a lot of government efficiency without much detail about what that would be, plus 1.5% economic growth, and yet, you know, that would be a different answer than the one that Liz Truss got. And when I pressed Nigel Farage on this, he did admit that it would be painful, that it would be very difficult. But he says, actually, in his defence, that the tough sort of message on get back to work, the people that he speaks to on the doorstep are all for that.
Is he a line of communication for the Starmer government into the Trump administration?
That's a real difficulty. The UK, of course, has appointed Peter Mandelson, Lord Mandelson, you know, a left-wing veteran politician, to be the UK ambassador to the United States. Nigel Farage was very critical of that, saying, look, it's just the sort of same kind of Westminster political type appointee that isn't going to work. What would work as an entrepreneur. We asked him about whether he would brief against Mandelson with Trump if there was something in the government's policy that he didn't agree with. He has said in the past and said again that he would help, that he would do what is in Britain's best interest. But I think there are lots of question marks around that, aren't there? Farage also said that there were trade deals for Britain with the US on specific sectors, not the big overarching UK-US trade deal that Britain would, of course, love to have. But he did say that he thinks that is possible. He named a number of sectors, whiskey and motorbikes and so on. But again, it's about delivery. It's one thing to say that people might be talking about it, it's another to actually deliver it.
Do we put Nigel Farage and the Reform UK, they've got the wind in their sails right now, do we put them in the same category as the AFD and National Rally, who have, the AFD's received that support from Musk, notably, in terms of right-wing parties in the ascendancy? And to what extent is Farage trying to tack maybe a little bit more centrist on some issues to take advantage of that wind in the sails and broaden the appeal?
Oh, no, absolutely. There is clearly a line to broaden support. The manifesto is largely in 2 out of 5 of the priorities of Reform UK are around immigration. He will have no comparison to any other European parties. There are similarities and there are differences. He doesn't mention any other parties that he might be akin to or whose policies he might embrace, not Marine Le Pen or AFD or anybody. He says, we're unique. He also says that Reform UK is a non-racist, non-secular party, and he has clearly drawn the line with, far-right figures, including Tommy Robinson, who's obviously in Germany. He's done that a number of times. But yes, the vote that he won last year in the election in Britain, obviously, he took a lot of votes from the Conservative Party. Now he's very much going after Labour. He wasn't above a few digs at the Labour Party, talking about Rachel from accounts when he was speaking of the Chancellor, Rachel Reeves, that she didn't have answers in his view. So he is obviously trying to broaden his appeal, but there's a long way to go before the next election, 2029. Can he shift that duopoly? 100 years we've had Labour and Conservative in power. Can there be another third upstart party?
Had a few coalitions in the meantime, but
yes, true.
I agree. That's the main point. Caroline, thank you very much indeed. Fantastic interview. It's well worth a watch. Go and find it. There's so much stuff in there that is worth paying attention to in terms of UK politics and international politics. Nigel Farage off to the inauguration, Donald Trump's second inauguration on Monday. Ahead of this event, Bloomberg Originals has taken a look at how Florida has now become the new center of power in the United States.
Miami Vice, the Magic Kingdom, spring break, alligators, and retirement homes. These things are often associated with Florida, but Florida is changing.
If you look at Miami right now, it's definitely a migration. They are coming from everywhere, most notoriously New York and Chicago.
It has become a tech haven as well as a financial services haven.
The state has really done an effort to court financial workers, court banks, and create what we call Wall Street South.
Florida has also transformed into the center of the Republican Party.
The rise of Florida Republicans really begins with COVID, when the whole country was locked down, but DeSantis had decided to keep Florida open and went around bragging about what he called the free state of Florida.
The great state of Florida.
Trump has made Mar-a-Lago the center of the United States government, and the people in his administration have roots in Florida.
The whole ethos of the modern Republican Party is Florida. Trump himself is Florida.
I think there are few places in the world where you're seeing such a combination of money, power, wealth, politics, all mixed together, all influencing each other. This is not your grandmother's Florida anymore.
Not your grandmother's Florida. Center of attention certainly maybe shifting, you could argue, out of Florida into Washington. The inauguration is coming up. Where is the real center of power, though? There's a lot of Florida influence in what is about to happen in Washington, D.C. But it's fascinating to see who is coming. So California is going to be there as well, pretty well represented. The tech story is coming to town as well. You've got some of the really big names lining up from the tech universe.
Yeah,
and they are beating a path to Donald Trump's door.
Jeff Bezos is going to be there on the list. Of course, Elon Musk, given his central role in the upcoming administration. Zuckerberg as well. And the notable changes that have come through from some of these CEOs as they try and adjust and align with the incoming Trump administration. The reform, the changes, the transformations, however you want to characterize it, cynical or not, as they trying to curry favor with Trump. Interesting, Shou Chu as well of TikTok US. Apparently, according to the New York Times, is going to be put on the dais, a prominent spot during the inauguration.
Really interesting, just in terms of the timing, because there's a holiday on Monday, and because of the way that the TikTok ruling is going to come through today, it's going to fall to the Trump administration to enact that ruling, and the idea is that it will basically say we will look for a reason for granting some sort of an extension, give the whole sort of process a little bit more time to unfold. Trump obviously seems certainly keen to not see that ban come into force.
And his Attorney General pick as well, nominee Pam Bondi, has not commented. She said she was not definitive in terms of whether or not she'd actually implement that law as well. So it's the implementation, to your point, which could be key in the days ahead for TikTok.
There's just a story I just want to bring to everybody's attention before we wrap the show up. Shipping stocks, really in focus right now. The Houthis have just come out with a statement indicating that as a result of the Gaza ceasefire, they are suspending attacks within the Red Sea. Now, that has had a massive inflationary impact in terms of the global shipping story as prices have gone up, as a fact that you've had to go round the long way. Now, obviously, this could change quite significantly, and you wonder how cautious the shippers are going to be. But here is there's an economic translation coming out of the Gaza story into what is happening in the Red Sea.
I'm sure our team are reaching out right now to the CEOs to get them on this to comment as to whether or not they will now feel secure enough and safe enough to send ships through that passageway, given the military assets that have been deployed as well to protect that waterway.
Let's talk about the weekend. We're done with the week. It's a holiday in the US on Monday. The inauguration is coming up. NFL playoffs, I'm told, kick off this weekend. Ultimately, the road to the Super Bowl. You've got the golf, Dubai Desert Classic. That's a great one. London Short Film Festival. I think the downhill is in Wenger.
Love a short film. Wenger, downhill.
Yeah.
Okay.
That wraps up my Sunday nights.
You're set.
I'm watching the skiing. I love watching the skiing on Sunday night. Very relaxing.
That keys us up for Davos.
It does.
Snow boots. Arsenal, Aston Villa. I had to check my timing. 5:30 tomorrow. That's going to be the game to watch, I think, in the Premier League. That's it for the opening trade. The Pulse is up next. This is Bloomberg.
the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Rio Tinto and Glencore are said to have discussed mining biggest potential merger. Now, we understand talks are not currently active. Now, Israel is expected to sign off on a deal to pause the war in Gaza after the Prime Minister, Benjamin Netanyahu, said the agreement with Hamas has been finalized. Plus, Bloomberg learns that Donald Trump plans to elevate crypto as a policy priority as part of a flurry of executive orders after his inauguration on Monday. So, of course, we'll bring you our interview with the chief executive of the crypto firm Tether later this hour. Now, let's take a look at the European markets map. Again, quite a lot going on in terms of inflation expectations. The focus, of course, on what the Fed does next, and then we look at policies into inauguration. I mean, we're hearing that there are quite a lot of executive orders that could be coming through from the White House as soon as next week. So global stocks actually rising a little bit. You can see Europe also a leg higher. The FTSE almost gaining some 1%. We look at S&P futures, 0.2% higher. Bitcoin over 100,000 on that executive order that we think will come very soon. And then sterling 121.93. Again, we do have quite a lot of things coming for the UK. We had some data, and expectations for BOE have changed. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Rio Tinto and Glencore have held early-stage talks about combining their businesses, but the discussions are said to be not currently active. Any such deal would create a big company, a behemoth, to rival long-standing leader BHP. So let's get more on our Bloomberg Scoop with Will Kennedy, Bloomberg Senior Executive Editor for Energy and Commodities. So, Will, what could be actually driving this potential deal?
Well, clearly there's a lot of impetus towards deals in the mining sector. This comes on the back of last year's abortive run by BHP against Anglo-American, and the impetus would largely be the same, is that Rio Tinto, one of the world's biggest mining companies with a lot of cash-generative iron ore, but where the demand profile does not look as strong, would like to bulk up in copper. And Glencore would offer some very strong copper assets, especially in Chile.
But so we understand, first of all, that there are hurdles, but are the talks active now?
We don't think they're talking right now. Our understanding is there was a conversation late last year about how they would bring the companies together, but those talks aren't happening at the moment. Whether they could come back is an open question. As you say, there are hurdles to the deal. For example, Glencore has a very large coal business that Rio Tinto would not probably want. It has exited the coal business for environmental reasons, and then likewise Glencore has a very, very big trading business that goes as far as oil, which probably doesn't fit with Rio's portfolio. So it would be a complicated deal to get done, which would probably require some spin-offs and divestments, and that may be one of the reasons why the talks haven't progressed thus far.
Yeah, so interesting. Well, thanks so much, Will Kennedy there, Bloomberg's Senior Executive Editor for Energy and Commodities. Now to geopolitics now, and the Israeli Prime Minister Benjamin Netanyahu says a deal to return hostages held in Gaza has been reached. Now, he's ordered his security cabinet to meet today to approve the truce. Netanyahu had previously accused Hamas of reneging on parts of a ceasefire agreement, now risking its completion. Hamas says it remains committed to the deal. Bloomberg's Oliver Crook joins me now from Tel Aviv. So, Ollie, just bring us up to date with the latest developments.
Yeah, so listen, there have been a lot of twists and turns since this deal was announced on Wednesday night by the Qatari Prime Minister, by Donald Trump on social media, by Joe Biden in his press conference. And really the early stumbling block was about sort of a negotiation between the Israeli state and Hamas and wanting to clear up details about hostage release and also a prisoner swap. Those seem to have been resolved early this morning. Benjamin Netanyahu said that he would convene the security cabinet in order to discuss and to vote on whether or not to implement this ceasefire deal. That meeting is ongoing right now, and that takes us to potentially the next stumbling block that could occur in these negotiations, and that is internally within the Israeli government. The government has been propped up in part by, yes, the Likud party, Benjamin Netanyahu's party, but also some far-right parties who have threatened basically to leave the coalition and walk away from the government if they move forward with this deal. There could be still some negotiations and sort of concessions that could be made, and even if they do walk away from this government, it could also sort of just progress this deal through a minority government. There is a huge and intense amount of pressure across Israel to get these hostages released, and so what we get, if we do get this deal sort of struck and it goes into effect on Sunday, the beginning of this hostage exchange, what we will get is a ceasefire in Gaza for 6 weeks. It will begin with the IDF, the Israeli forces, moving away from the populated areas to the eastern flank, the eastern corridor of Gaza, but you also get the first release of hostages. We expect that to be 3 women on Sunday. That will also prompt the release of prisoners held by the Israelis, hundreds and into the over 1,000 over the next coming weeks, and that is really what everyone here in the region, and really I think across the world, are holding their breath that this agreement can come into effect this Sunday.
Ollie, thanks so much. Oliver Crook there with the very latest, of course, on the ceasefire and the Middle East. Now, Donald Trump's inauguration is just days away. He's planning a flurry of executive orders, which insiders expect him to action from as soon as day one. Bloomberg has learned that they include elevating crypto as a policy priority. Now, meanwhile, Trump Secretary nominee Scott Bessent is on track to be confirmed following a hearing that he's warned of an economic crisis if tax cuts are not extended. Now, a lot to discuss with Leslie Vinjamuri, Director of the U.S. and Americas Program at Chatham House, and Jimmy Muchachetre, the Senior Equity Analyst at Investec. So, Jimmy and Leslie, thanks so much for joining us.
Thank you.
The markets is basically looking at Leslie to try and understand what policy looks like. So, enlighten us, and in the first couple of days, are we actually going to see executive orders that work? Is it going to be a material difference in terms of policy, trade, tariffs? Or will he be doing, broader things and then looking at the markets?
I think Trump is going to want to sort of, we don't know, but I think he's going to want to sort of come in with a big bang. He's already, there's already been a feeling that he's president, but it is, as we know, Francine, it's radically different once he is actually the sitting president in the White House. So I do think that he will move forward to make some big announcements. Whether they'll work is a different question, but I think everybody's looking to see what does he do on immigration? How big does he go? He's going to want some visible sign that he's delivering on that agenda, which was so critical to his base. Clearly, he's not going to seal the border. Clearly, it's going to be dialed back. But I think he does want those headlines while not scaring off, folks that think that he might, retract on the high-skilled immigration, the H-1B visa. We've seen that play. Secondly, I think he's going to really make some announcements on tariffs. And this has already been in play.
Because that feels like a self-goal. If
it does. It does feel like an own goal. We saw the interview with Canada's foreign minister yesterday saying, look, we're working with him on fentanyl, on really securing the border, but if the U.S. president turns to tariffs, he is starting a trade war, and we will retaliate. The most talked about thing, Francine, is all, from many countries, Canada, Mexico, across Europe, China, is how to respond to Donald Trump, especially on this question of tariffs. I don't see how he can do nothing. Yeah. He is a man who wants to be seen to be strong on the international scene. Yeah. I do think that the deal that's being agreed, we think, is really one that gives President Trump a huge opportunity to try and move forward a broader agenda in the Middle East, not without very difficult obstacles to moving it forward over phases.
We'll get back to foreign policy in a second, but just on tariffs, Jimmy, I guess the question, and we speak to a lot of people on Wall Street, even the big chief executives that say, look, first of all, he cares about the markets. Yeah. He doesn't have targets, but he certainly wants to have a strong economy. And so if you go too hard on tariffs, that puts it in jeopardy. This is a negotiating tool.
Yeah, 100%. I think if you go back to the campaign, one of the things that he kept emphasizing was inflation, the cost of living in America. So it'll be foolhardy for him to campaign on one thing and then do something that actually makes the situation worse. So what we think will happen is, yes, we'll have tariffs. Probably they'll be phased in. It'll be a balancing act, and a lot of that is a negotiating tool for sure. And we know that he cares about the markets, and the markets have shown since the beginning of the year they are very, very worried about inflation and knock-on impact on interest rates.
But do you think they're too optimistic at the moment? Because it feels like actually they're pricing, gung-ho for a U.S. economic growth, inflation, kind of, there's wobbles about what the Fed does, but they feel okay.
Yeah, I think if we look at it from a market perspective, it's broadly a positive story for the economic indicators, broadly positive for the markets. Yes, there are risks. Trump is Trump. He'll do some things that will surprise markets. But broadly speaking, is pro-regulation, anti-regulation, is pro-business, is pro-deals, which are all good things. So we think net the market is kind of in a wait-and-see mode. It's a good thing, actually, that the markets are closed on Monday, so we can kind of digest what happens as soon as he hits office.
The market's doing a bit of yoga. So what does it mean, Leslie, when you do an executive order, for example, on crypto policy? It's unclear. I mean, executive orders show you the direction, but is it necessarily actionable straight away? It feels like foreign policy could be more tangible.
Executive orders are very real. I think, the question is later on, can they be more easily undone because they haven't, they're not legislation. But yeah, they're real. Absolutely. The question is, will he sort of say he's doing something and then walk it back? And I think to the comment about it being tariffs being a negotiating tactic, absolutely right. And the big question is, how prepared is Europe? How prepared is Canada? Do they have their lists? Are they actually going to retaliate? Or are they going to say, look, we're going to buy more American goods and reduce our trade deficit and surplus and then he starts to walk back, and those are the sort of unknowns. But it is extraordinary how quickly people have moved. The number of people that are turning up to the inauguration, that are giving to the inauguration, that are seemingly enthusiastic and ready for this it's really, the energy is extraordinary. The markets are clearly, very optimistic. And I think that, the hearings of Scott Bessent were very, in many ways, reassuring that, this is a level-headed incoming Treasury Secretary who has a big geopolitical remit, let's be clear, on the sanctions question.
Especially with China.
Reassuring on the independence of the Fed, something that people had, I think, been very worried about on tax cuts. Tariffs is sort of the anomaly if you're, thinking about the stability and the growth question. And it's still not clear. We were just, talking about this coming in. How are they going to reduce the debt? I guess it's...
No one talks about it. I mean, it wasn't a campaign
issue. Kick that can down the road, as with many other things, of course.
But this is a big question, right? It's fixed income. And we saw this massive market moves because of bonds, which basically then infected also the gilts here. Are we just going to see a lot more volatility? Equities in the U.S., parts of the equity market is also priced to perfection.
Yeah, I think 100%. I think what we know for sure is that we have to take his word on Make America Great Again. So he's going to have pro-American policies, and then the market will have to deal with the knock-on impacts of those policies. And as long as those policies seem to be causing the U.S. economy to grow, then that will keep the bond vigilantes in check, because no one needs to worry about the debt. But if we start to have inflation, we start to have the Fed making anti-market moves, if we start to have other problems that show that MAGA is actually not working, then the debt becomes a problem and the bond vigilantes will come in play.
Okay, thank you both. Jimmy and Leslie, stick around and we'll talk a lot more about foreign policy and try and figure out the difference between policy and, I guess, some of the negotiation tactics. Leslie Vinjamuri, Jimmy Muchachetra from Investec. Both stay with us, and this is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern, only on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Welcome back, everyone. Now, China's economic expansion met the government's annual 5% target last year after a stimulus blitz, but Donald Trump's looming tariffs threaten further growth. Now, policy speculation has seen the Trump trade dominate equity markets globally since the November election. Still with us, Leslie Vinjamuri, director of the U.S. and Americas program at Chatham House, Jimmy Muchachetra, senior equity analyst at Investec. So thank you both for joining us. Jimmy, yesterday, for example, we're looking at some of the luxury stocks. I mean, they've really got a bit of a beating, but they came back because the U.S. consumer seems to be back, but also China's not doing it as badly as expected. What kind of growth prospects do you see for the world this year?
Well, we think U.S. is still going to lead the world in terms of macroeconomic growth. If you look at nominal GDP in the U.S., we're looking at somewhere between 2.5% and 3%. That's way better than anywhere else, whether it's the UK, Europe, or even China. But what we saw yesterday was, one, a lot of pent-up demand in terms of luxury stocks that have been beaten down, including the beauty stocks as well. And then two, from Richmond's results, we saw perhaps, a chink that maybe things are turning. And if they are turning, we'll get confirmation with Q1 results. I think LVMH reports on the 28th of January. So if that comes in and is positive, then we start to see a lot of momentum in those stocks.
Leslie, what would the U.S.-China relationship look like? I mean, hearing Scott Bessent, they're going after China big.
Absolutely. And if you look sort of, we all know Donald Trump is going to call the shots, or we assume, in this next administration. But if you look at his top team, they are pretty tough on China. Certainly the Secretary of State, obviously, we've heard what Bessent has said just yesterday. And so the tariffs look like they'll be significant. China's smart, right? You know, Evan Medeiros had a great piece. He said they are adapting, they are retaliating, and they're thinking very strategically. And they're investing in home. They're thinking very strategically about how to deal. The big question is, what does the diplomacy look like? I know the markets are watching, the tariffs and everything else, but the thing that's kept the relationship on track is actually having that quiet diplomacy that does keep it from going off the rails. Now, even here, China's getting pretty smart. They're sending a very high-level official to the inauguration. We've just heard that was sort of being debated for a very long time, who would go. But they are going to be a tough player, and it's going to be an extremely difficult 100 days ahead, setting the tone, but also the next 4 years, obviously.
I mean, there's so many questions about, again, the policies, foreign policy. What is the one thing you would like to know from the new incoming administration? We don't know exactly what happens with Ukraine, if he'll be able to get the support from Congress to send, if there's going to be a peace deal, Middle East, and then what happens to the Arctic because of Greenland?
Yeah, I mean,
there's a lot.
China, right, and the Taiwan question. What are the signals that are sent on Taiwan, and how are they read through the lens of what this administration does in terms of trying to get a deal? I mean, for Europe, it's all about Ukraine. Whether he does what he's indicating he'll do, which is to go really hard on sanctions against Russia in order to bring them to the table, offer Ukraine more assistance up front in order to, again, bring Russia to the table. But then what? And this is where the incoming administration's been pretty quiet on details, and everything is about the details. If there is some sort of agreement, who secures the border? Is Donald Trump going to actually, put America behind, that security assurance, not only to Ukraine, but also to the rest of Europe? What is deterrence going to look like? This is a very challenging question. It's going to send a signal, obviously, to Taiwan. But I think that Donald Trump, even though that is a sort of pressing and urgent concern for Europe, I think Donald Trump is going to be looking at the Middle East, because this is where he, stands to gain. I think we all joke about it, but I think, he does want to be the president that delivers a deal of the century, that gets a prize, a Nobel Peace Prize for doing it. And there's the beginning of something, but it's very high stakes. It's very uncertain where it goes from here. But it opens up the opportunity to look at Iran, to do normalization between Israel and Saudi. Opens up a lot of opportunity, very, very fraught, however.
And for markets, Jimmy, it's a bit of a nightmare to understand actually negotiation tactics, policy, and what that means for inflation at the end of the day, and dollar policy.
Yeah, 100%. I think for the markets, we are looking at what's called the 3 S's. What's the size, what's the scale, or the size, the scope of these policies, and the sequencing. And I think the sequencing might actually be the more important thing for the market. So we talked about executive orders. That's something he can do on Monday. But then there are a lot of other things that require legislature. And, even though they've got a majority in both houses, it's still going to take time. So that sequencing is what will determine, what happens to inflation, what happens to borders, and all those immigration, et cetera, et cetera. So for the markets, we're going to take it one step at a time, see what's coming down the pike, and then reprice accordingly.
Good luck.
Jimmy, I mean, again, it's going to be an interesting year with a lot to talk about.
Never a down moment with Donald Trump.
Exactly. Let's hope he's as measured as the sequencing the sequencers would like to see.
Okay, we'll talk more about the sequencing. Leslie Jamuri from Chatham House, Jimmy Winchechetre from Investec, and this is Bloomberg.
fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Bloomberg Invest is back. Join me, Sonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Still with us, Leslie and Jimmy. We were talking a little bit before about the Trump era. What does he care about? Does he care about his legacy?
He absolutely cares about his legacy. Some people say he doesn't. I think they're absolutely wrong. He cares about his legacy. He wants to go big. Globally, he wants to go big. He wants to be the president that doesn't do wars, but that does do big peace deals that transform the Middle East, America's role in Europe, and America's position with respect to China. He cares about the people that have betrayed him, and I think many people at home in the United States are watching the Justice Department. They're watching the FBI. They're concerned about, the positions that they've taken. I think that's a very significant agenda at home. And he cares about being not normal, right? Being visible, successful, and a change, right? A disruptor and change president. So I don't think it's going to be sequenced. And I don't think it's going to be, smooth, but there might be some good things that come out of it.
Does he look at dollar strength, or does he look at equity?
He does look at dollar strength. It's a show of American power and exceptionalism, 100%. But the chaos that we expect to come from Donald Trump means that this is going to be a stock picker's market.
Okay, there you go. You've heard it here first on The Pulse. Jimmy Mitchell there from Investec, Leslie Benjamin from Chatham House. Coming up, after last year's flurry of M&A activity, what does 2025 look like? We speak to the co-head of EMEA M&A at JP Morgan. That's next, and this is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change, In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power, live around the world only on Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Nakwa here in London, and these are your top stories. Rio Tinto and Glencore is said to have discussed mining's biggest ever potential merger. We understand talks are not now currently active. Israel expected to sign off on a deal to pause the war in Gaza after the Prime Minister, Benjamin Netanyahu, said the agreement with Hamas has been finalized. Plus, Bloomberg learns that Donald Trump plans to elevate crypto as a policy priority as part of a flurry of executive orders after his inauguration on Monday. Now, Rio Tinto and Glencore have held early-stage talks about combining their businesses, but the discussions are said to be not currently active. Any such deal would create a mining giant to rival long-standing leader BHP. Now, the mining industry has been galvanized by a wave of deal-making in the past couple of years. And following last year's increase in M&A activity across all regions, the outlook for 2025 remains positive. Well, that's the view of my next guest, Dwayne Lysite, co-head of EMEA M&A at JP Morgan, who joins me now. Dwayne, thanks so much, as always, for joining us. Look, there's a lot of hope that animal spirits will be reignited, that we can look through all of the worries on geopolitics and internal politics to focus on especially the U.S. and strong growth. Will that lead to more M&A?
Well, first of all, thank you for having me on today, Francine. That is our hope. I think there's a number of positive drivers. When you had me on last year, we talked about sort of cautiously optimistic. I think we're optimistic on the outlook. Geopolitically, we have 50% of the world's population going to the polls. A lot of that has come through. Hopefully, economic focus, there's more clarity around that. When you look at sort of general growth rates, they're stronger. Inflation hopefully tamed, interest rates coming down to match that. Maybe it is higher for longer, but I think it's within a range that people can actually judge, should I do this deal because I know what the future might hold a little better than I did 12, 18, 24 months ago. And when it comes to it, it is all about how positive people are, the confidence factor for M&A.
But I guess the concern is that a lot of chief executives in Europe will say, look, I'm not really sure what it means for Europe. We have a lot of political uncertainty. France, Germany, also here in the UK. If you have extra tariffs, do they just sit on it? Do they look at M&A instead of doing investment? Or how do you see that playing out?
I think M&A will actually be, those will provide a catalyst M&A in the sense that you're going to have to get ahead of some of these. Do you need to move, for example, or seek production outside of Europe? Do you need to put more in the US? If US is more of the growth market globally, am I looking at US acquisitions? Now, clearly, you've got the US dollar pretty strong at the moment, probably strengthening potentially further. That could be a counter to it. But my sense is that CEOs, boards, management teams, they want to get ahead of these types of things. They're not going to wait for them to impact them. Clearly, they need a little bit of direction. And I think a lot of geopolitically, I think governments around the world are waiting to see what happens before any great reactions occur. But our sense is that it's not going to hamper it dramatically. But let's see what they do.
Borrowing costs, of course, generally coming down, but remain volatile. What's your expectation?
Our sense is that, and when you look at it, last year, the level of, say, high-yield leverage loans, etc., that were raised was higher than 2021. So it's telling us that the financing is there. People recognize the cost. They're factoring it more and more. And our sense is we're in a more stable financing market. So again, don't want to sound overly confident, but I think we are confident that that has reached a level where people want to get on and do the transactions, particularly the sponsor, our private equity, the fund community as well, which is sitting on a lot of dry equity, a lot of dry powder, as we call it, and they are seeking to do deals.
So what do your clients want? Again, if you look at their biggest concerns, do they want to try an IPO? Do they want to do M&A? Or there's also, of course, talk about break or splitting themselves up to create more value.
And that corporate clarity point, it is talked about quite a lot. And look at activism in terms of it is globalizing. Look at the levels in Japan, for example, and they're seeking out bringing what they did in the US, what they've done in EMEA over many years, into fresher markets, if you like. So that trend around corporate clarity is definitely going to drive M&A. I think there are a number of other drivers in terms of the need to be cross-border more and more, so cross-border transactions are on the increase. The seeking of bringing in AI into your business, we see that as a big mover. And tech generally, it was the second largest sector globally last year. We think there's a lot to be done in years to come.
Which sectors do you think will benefit from M&A, or is there one particularly that will consolidate more than others?
Our number one is always diversified industries, primarily because it's the largest, and there's so much there. How it links with tech in particular, we see the opportunity there within the FIG space. Look at the banks consolidating across EMEA. Look at the asset managers getting bigger. We see those as key drivers as well. And then you can't get away from the energy transition. So energy, power, renewables, that remains a very strong space. And those were diversified industries, EPRM, as you might refer to it, and FIG were the three largest sectors in EMEA last year. We probably see that trend continuing through 2025.
Is there anything, when you look at some of the countries, will it be in one country rather than the other? And is that because of less political turmoil? Would the chief executives look through that because they worry more about U.S. tariffs?
I think they probably look through it. Let's see. We had a very strong rebound, as you know, in the UK in 2024, up 50-odd%, representing 30% of EMEA volumes, but strong in France, Germany, the Nordics. We think it's going to be relatively spread out. And to your question, when you look at a country and a company, often their exposure to that specific country is not necessarily that significant. We often talk about the UK and the travails it has had over the last couple of years. But the reality is a lot of the big companies there have very small proportions of their revenue actually in the UK. They're much more global businesses. So I think CEOs, boards look through that and really think about the bigger opportunities from a global perspective, and back to the dominance of the US and how it's going to conduct its tariff agreements.
But what's the one thing that could change everything? I mean, if you look at geopolitics, again, the chief executive just looked through that to get on with M&A. Is it funding, or is it just volatility in markets that could really put people off? I think in many ways it's a mixture of those. I think it is the bigger geopolitical hits. Mm-hmm. But, we've had hopefully good news around Gaza, Hamas. Yeah. The question will be, can Ukraine, Russia find a solution there as well? And I think people, generally speaking, feel more buoyant about the future. But who knows what's ahead of us? There's a lot going on in 2025,
there
so stay
is.
tuned.
Thank you very much.
Dwayne, thank you so much for joining us. Dwayne Lysite there, co-head of EMEA M&A at JP Morgan. Now, coming up, Bloomberg understands that President-elect Donald Trump is planning to declare crypto a national priority. We hear from the Tether CEO about the company's U.S. expansion plans. That's next, and this is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
the tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Well, Brexit architect and Reform UK party leader Nigel Farage says Elon Musk is a force for democratic good and a hero, but should not be seen to be dictating what the U.S. Treasury Department do. Now, here's some of our interview.
In America, you know, billionaires have more influence over society than we do in Britain. There's no, culturally, there's no question about that. Musk is a very powerful figure. Of that, there's no doubt. But I also think he's a hero. I mean, if you think back to the last election in 2020 in America, where the Hunter Biden laptop was there, the evidence was clear of criminality, for which he's now been convicted of one or two things. The evidence was, I mean, all sorts of things were there that deserved to be in the public domain, especially his father's close relationship and telephone calls with various companies.
That's a separate issue.
No, it isn't. No, it isn't at all, and I'll tell you why.
Yeah.
All the social media channels forbade any conversation about that subject. The Americans had an election with no debate on this issue. Musk has come along and bought Twitter, albeit for quite a high price. And free speech is coming back to America and the Western world. You've even seen Meta in this week. I mean, an extraordinary U-turn that has been made. So Musk is a force for good in terms of open democratic argument. When it comes to power and influence, I think the important thing is he mustn't be seen himself to be dictating what the Treasury Department do, and that is important.
A lot of people would disagree with the point around, freedom of speech. Particularly the Europeans are deeply concerned about misinformation.
Anything we disagree with is misinformation. I know. Yes. We must all support globalism. We must all support open borders. If we don't, it's misinformation. I don't buy it.
Well, that was Nigel Farage, leader of the UK's Reform Party, speaking on the Bloomberg UK Politics podcast. Now, to some other stories making news, and the French Prime Minister, François Bayrou, survived his first no-confidence motion as the far-right and socialists abstained in the vote. In the National Assembly, with 577 lawmakers, just 131 supported the far-left's proposal to oust the new premier, while the Socialist Party's indirect support marks a shift in their position and gives Bayrou a better chance of passing the budget and surviving future censure motions. Now, Bloomberg has also been told that U.S. Treasury Secretary Janet Yellen's computer was infiltrated in a breach blamed on Chinese state-sponsored hackers. Sources say unclassified files were accessed as part of a previously disclosed cyber attack on the Treasury. Bloomberg has learned that President-elect Donald Trump is planning to release an executive order to make crypto a national priority. Meanwhile, crypto assets, including Bitcoin, are rallying, with digital coin topping the $100,000 level. Now, we spoke to Paolo Ardoino, the chief executive of the crypto company Tether, who is considering expanding its U.S. presence.
Having support from a crypto-friendly administration in the U.S. is very important because, let me tell you, I'm Italian, and I grew up in the 80s and early 90s when I was a kid, and the US have always been the country of technology, the country of having a single innovation. And we felt like, as an industry, as a crypto industry, we felt that in the last 4 years, the US dropped the ball on the innovation around cryptocurrencies and digital assets in general. And so seeing the US bringing forward this innovation rescuing the ball and bringing this innovation forward is very important, because the entire world is looking at the US for guidance.
But Paolo, so with Trump in charge, how does it actually change the environment for crypto and specifically for Tether?
So I think that many companies in the US have been affected by the former guidance of the SEC. It's not even the elephant in the room anymore. It has been clear to everyone. And there was the Operation Choke Point 2.0 that was basically impairing banks from supporting crypto companies. So if all that will change, we are going to see a more flourishing ecosystem, more innovation, more support for stablecoin payments in the US and outside the US, for cross-border payments, for commodity trading and trade finance, which Tether is heavily involved in. So we are very, very excited about that.
So what does that mean for Tether in the US? Will there be more changes come? Will it be much more present in the US?
We'll see. I mean, definitely recently we announced an investment of a US-listed company called Rumble. It's a great opportunity to start looking at the US environment and how it will change. So I cannot exclude Tether moving a bit more towards some US presence, but we are also doing that in a cautious way. So for the moment, we need regulatory clarity and guidance. So we need to see what are the laws looking like coming from the US, and then we will decide. But in the meanwhile, as you said, Tether is very, very profitable, and so is looking at different opportunities across the world, including the US, as we demonstrated recently.
Paolo, you're close to Lutnick. Is that opening doors? Will it open doors?
Look, we don't expect any favors, and we are grateful to Cantor for the fact that they are a major custodian for the U.S. Treasury bills. As I think it's clear for a company like Tether, since the vast majority of our reserves are invested in U.S. Treasuries short term, we need to be able to have a very important financial institution that is helping with the process of purchasing and redeeming USDT and have direct connection with the Fed for that. So I think it gives to our user base incredible comfort. So we're definitely grateful for their support there.
Paolo, we've seen news of your plans in El Salvador. Will you, Giancarlo, or JL relocate there?
So yes, we plan to spend a good amount of time there. It's a beautiful country. I suggest everyone to come and see it. The president is a great person. Is a great politician. It clearly shows how a politician, a single politician that is at the top, can change the fate of a country. He made the country from the most unsafe country in the world to the safest country in the Americas. The economy is great. The economy is improving on a month-to-month basis. There are many companies, not just Tether and iFinex, relocating there. We are seeing even Rumble got into a deal with the country for cloud services. We are talking to so many other companies, excited to see the potential growth of even their business in El Salvador and opening offices there. So I think you could compare it to maybe Singapore like 40 years ago, but I think it's going to be probably the most important place in Central and South America to be for any company in the next few years.
So do you already have a very clear idea on how many people, for example, you plan to hire there?
Definitely, we are going to hire many people from different areas. So some people in our team are planning to relocate there and bring in even the families. We are going to hire a variety of different roles. So we'll be definitely in the tens of people at the beginning and probably hundreds in the future, from compliance to software developers and you name it. But definitely is going to be our headquarters. So we need to have people there.
So when will the building of the Tether Tower, it's a tongue twister, actually start? Have you purchased the land?
Well, not yet. We are looking at different places. So we are considering either Central San Salvador or just outside. But we are already in good process in looking at different opportunities where the Tether Tower will be built. So we see the Tether Tower not only servicing Tether, of course. We believe that could be the home of many companies that are looking to relocate there and start, dipping their toes in the water.
So does it also mean that the incorporation will shift when you relocate? Or will Tether
Yes,
hold
we're in the progress No, we are in the progress of moving and relocating the companies. I think the process will be finished in the next few days or a couple of weeks maximum.
Well, that was the Tether chief executive, Paolo Arduino, speaking to me earlier. Now, coming up, Wall Street's 6 largest banks returned $100 billion to investors last year. That's the most since 2021. We'll discuss those blockbuster earnings next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg Invest is back. Join me, Sonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. Now, Bank of America's fourth quarter profit has exceeded analyst estimates, boosted by high investment banking fees and, of course, strong net interest income. Morgan Stanley also saw its fourth quarter profit more than double. For more, let's bring in Bloomberg's Charlie Wells. Charlie, thank you so much for joining us. I mean, first of all, banks have put up really, really good results. And that's, again, ahead of a Trump presidency where we're expecting more deregulation and better things to come for banks.
Yeah, Francine, I mean, this was one of those quarters where the sun was kind of shining on two streets, Wall Street and Main Street. You're going to have to pardon that pun. But basically, rates were really cooperating for deal makers, right? That brought financing costs down and brought them back to the table. Things were volatile. That was really great for traders. I'm thinking about Goldman's equity traders. They had their best year ever. But also on Main Street, right? That American consumer has remained strong. We saw some loan loss provisions ticking up, but we also saw Americans continue to use their credit cards. That generated more income at JP Morgan. So it was that kind of, both sides of the street that was really benefited there.
So given the great results overall, why is Citi cutting jobs?
I mean, this is one of those difficult moments where, even if Citibank is, generating, record revenue, they're still under pressure to get more efficient. And we heard this with that profitability, metric, return on tangible common equity. So in their earnings, they said that they're going to actually reduce that goal for 2026. And this is sort of a sign that expenses may be under pressure there. When expenses are under pressure, what we know is that can result in layoffs. And there was Bloomberg reporting this week that even this week, they were making cuts.
So if you're a European bank, you're thinking, uh-oh.
You were definitely thinking, because that bar is set so high. And it's difficult because I feel like American and European banks are like cousins where they're very similar. You can make comparisons. I mean, even if you look at their stocks, European bank stock indices are outperforming the broader market, just like their American cousins. But the environment is different, just like it is for cousins, where, you've got this economic situation where in the U.S. it's been very strong. On the European side, we just found out this week that the largest economy in Europe, shrank for the second year in a row. And so it's just operating in that different set of circumstances. So high bar to follow. They're not going to love that.
Really, very quickly, regulation around the world will change because of what the U.S. is doing. And so the U.K. said, look, we'll wait on Basel.
Absolutely. That was this morning. We just heard the Bank of England say they are going to delay Basel 3.1, as it's referred to in this country, until 2027. And this was the issue with Trump, where basically there's this concern that it would create a race to the bottom on regulation. It's looking like a lot of people want to delay those sorts of regulations across jurisdictions.
Charlie, thank you so much. As always, Charlie Wells there with very latest on banks. Now, of next week, we'll be live from the World Economic Forum annual meeting in Davos. We'll bring you exclusive interviews with some of the world's most influential business leaders and key power brokers. It's going to be a week not to miss. That's next week, but plenty more on Bloomberg Brief next. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977, when by then I had a little research station, and 4 of my students were kidnapped, and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Good morning from our global headquarters in New York. I'm Manny Scranney. You're welcome to Bloomberg Brief. Let's set that agenda. Yields drop on more dovish Fed speak, wrapping up a busy week of economic data and bank earnings. Right on track. Treasury Secretary nominee Scott Bessent clears a Senate grilling just days ahead of the presidential inauguration. And a crucial weekend for TikTok. The U.S. Supreme Court is set to rule on the app's shutdown as the incoming president pledges an extension. Good morning. Wow, what a week for bonds. Down 16 basis points. We had that beautiful number from CPI, which relieved the bond market. Top it off with a dovish Waller, shifting to possibility of a March cut if the data rolls in as we saw from the CPI. Bonds are flat at the moment. 460 is where we trade. Don't rule out the possibility of more rate cuts. That was the narrative. By the way, Nomura joins T. Rowe Price saying you could see 6% on these bond yields. It's not over yet. Stock market takes relief from the relief in the yield. We've got a number of notes out this morning. Of course, Bank of America, Michael Hartner comes out with, you'll have a stable performance in U.S. equities. We're up just under 0.5% on the NASDAQ. U.S. stocks are protected by Trump from the downside. Risks such as high concentration are there. So the Trump put is incredibly important for Bank of America in the near term. Other stocks we're keeping an eye on. This is what we've got for you. Rio Tinto rising as Bloomberg reports it has held early talks with Glencore, although it pulled back after Rio says the talks are not active. MicroStrategy and other crypto stocks rising as President-elect Donald Trump plans to release an executive order making crypto a national priority. Applied Materials has been upgraded to overweight from sector weight as KeyBank as the broker repositions semi-cap coverage toward immediate growth drivers. In just a few moments, Tim Graff will start the conversation with me from State Street. Later in the hour, we have Kathy Jones from Charles Schwab. A feast for you. First up, Treasury Secretary nominee Scott Bessent paves the way for confirmation.
The United States is not going to default on its debt if I'm confirmed. The FOMC should be independent. I will be 100% on board for taking sanctions up, especially on the Russian oil majors. Americans are barreling towards an economic crisis at year end. If we do not renew and extend, then we will be facing an economic calamity. On CBDCs, I see no reason for the U.S. to have a central bank digital currency. I firmly believe that if confirmed and with your counsel and support, we can usher in a new, more balanced era of prosperity.
not just prosperity, but a generational opportunity and a golden age. My guest is Tim Graff, head of EMEA for macro strategy over at State Street. Tim, look, the calamity of no tax deal were front and center from Bessent yesterday. You say that for 2025, you've got to make some heroic assumptions. What's the most heroic assumption that you heard from Scott Bessent?
From Bessent himself, it was one that actually wasn't in the clip just there, which is talking about tariffs not being inflationary in any sense. And look, that may well be true. Actually, the first round of Trump tariffs in his first term were not that inflationary when they came about. They were absorbed primarily by retailer margins and to a certain degree by movements in currencies. That may be the case this time around, but if we're talking about some of the extreme tariffs that have been mooted during the campaign season by Trump and his team, I think that's a fairly heroic assumption to think that they wouldn't feed at some point through into higher prices and higher inflation.
Did that just chip away at the credibility? Because he's promising, you know, the power of 3, and 3% deficit is one of those, and that's the holy grail for the bond market, isn't it?
It is. I think that's a heroic assumption for the very short term. Over the long term, I think it's a very attainable goal and a very worthwhile goal. In the very short run, I suspect it won't be met so quickly, just given the size of entitlements. You probably need the economy to grow and grow your way out towards smaller deficits. But yeah, I think whether it damages his credibility, I'm not certain. This is a hearing. He's going to say all the right things and, you know, get across the points that the administration wants to get across. But I think we do have to take with a grain of salt some of the more heroic assumptions that we're talking about and some of the more flowery language on, you know, extending the tax cut, not extending the tax cuts being a potential calamity. I mean, that's probably overstating the case a little bit, even if the goal is probably worthwhile.
Okay, I mean, you're right. A lot of this was political theater, getting the statements out there, the agenda out there. When you look at the performance in the bond market this week, Tim, down 16 basis points, the CPI was the saving grace in the middle of the week. But again, going into this administration, term premium is up. There are concerns about inflation. As you say, he decried the tariffs would not deliver inflation. Where are you in this danger zone, 4.5% to 5%? Are you more of the view that tariffs have the propensity to deliver inflation and we're not done with the right yet?
I think that's right. I think the next 6 months are going to be, I think, quite volatile when it comes to expectations around policy and therefore what that might do to inflation. And that's both a trade policy dynamic that contributes to that, as well as the fiscal dynamics that we've already discussed. And I probably do take kind of the high end of that range. I don't think we go much further beyond 5.25% on 10-year yields. But I do think we have the potential to test that, just given the policy framework that is being put out by the Trump administration, whether it's trade, fiscal policy, immigration policy, we haven't really talked about, that has an inflationary tilt to it. I suspect the risk reward is favoring the upper end of that range, even if I don't think you go too far beyond, say, 5.25%. I think the near-term dynamics argue that you probably need to push towards higher yields.
How much of a jolt then? I mean, T. Rowe Price and Nomura are up at 6%. You're at 5.25%. You're the bid, they're the offer. At 5.25%, what does that do? Just make a market. I can charge brokerage in the middle. Would 5.25% give me a cyclical correction? You say it's overdue.
I think it certainly tightens conditions, and the most hawkish Fed member, when you look at their projections, would still tell you that policy, based on their own projections in the dots, would tell you policy is restrictive. And if you take long-end rates higher, that further restricts the economy a little bit. And so I think it does lead to potentially a stronger downturn or a slowing of the U.S. economy. I'm not forecasting a recession by any means. So yes, I think it does tighten conditions. I wouldn't see those forecasts for even higher than that as likely, just given long-term yields typically wind up being around where nominal GDP is, and I don't see 6% nominal GDP. I see it as closer to maybe 4.5% to 5% long run. So that's why I kind of top yields out where I do.
Now, your contrarian view for 2025 is it's sort of very you. I'm not a very big fan, probably not being a fan of equities. I mean, can you stand that up for me? Because I've got Michael Hart in here saying that I've got the Trump put, which is active and loud. It's going to be U.S. stocks are protected by Trump from the downside. So why are you not a fan?
I just think it's a year where you're following two very strong years for equities, the last year of which was, I think, really helped along by the prospect of easing from the Fed and an easing bias, most notably, from the Fed. And you had the promise of stimulus from China in the second half of the year that contributed to an improving global growth dynamic. And that's going to feed into a positive story for risky asset valuations. Well, both of those factors are kind of done. We've seen a lot of stimulus from China, and it's not exactly been the most scintillating when it comes to the domestic growth story. And you've seen the Fed now, I think, adopt much more of an on-hold posture. So for the new year, what you need are, I think, heroic assumptions to be met, and that is, continued growth in revenue, which is certainly possible. These are great companies we're talking about in terms of the U.S. tech sector that's driving valuation. But I think you're also assuming that margins improve further from here. And when you then go back to all of these policy risks we've just talked about on trade, on fiscal policy, et cetera, I do wonder if that's the heroic assumption here, that margins will continue to improve because you have a lot of factors, whether it's on rates or whether it's on tariffs, that have the potential to damage margins. So that's where I'm not necessarily doom and gloom or bearish. It just feels as though there's a lot of good news here already in the price.
Okay, well, don't worry. We've got 12 months to reassess, and one can always pivot. It's the art of how you do it. Tim, thank you very much. Tim Graff there at State Street. Other stories trending on your Bloomberg terminal this morning. This is what we got. Treasury Secretary nominee Scott Bessent is on track to be confirmed following his hearing. It's unclear when the Republican-controlled Senate will vote on his nomination. However, Democrats stated specific objections to him taking the position. If confirmed, Bessent will be the first openly gay Treasury Secretary. President Xi Jinping will not attend President-elect Trump's inauguration, but is sending the vice president instead. The announcement confirming the appearance said China wants stable, healthy, and sustainable relationship with the U.S. This comes as the relationship between the two countries has deteriorated in recent years. Bloomberg sources say President-elect Donald Trump is planning to release an executive order elevating crypto as a policy priority and giving the industry insiders a voice within his administration. The order may direct government agencies to review policies as digital assets and pause litigation. Just a quick check on the price of Bitcoin, as you can see there. I mean, the lines potentially from this executive order are creation of a national Bitcoin stockpile and a permanent national asset to benefit all Americans. Up she goes, up 1.84%. Coming up on the show, we are going to talk more about geopolitics. We are back to Israel as the potential for the ceasefire to evolve is underway.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Monday. Donald Trump will be sworn in as the 47th President of the United States. Bloomberg will have special coverage of the historic inauguration, live from Washington, D.C. It all starts at 11 a.m. Eastern.
Breaking news across the Bloomberg terminal from Israel now. The Security Cabinet are meeting, and these are the first lines that they're delivering. The hostage release is expected on Sunday, pending approvals. These are the first lines to come across the Bloomberg terminal. Let's get to Tel Aviv. Our colleague Oliver Crook is on the ground. Oliver, this is the Security Cabinet, then we have the full Cabinet. The expectations in terms of passage of this agreed deal in the Security Cabinet is where it's perhaps going to be more contentious relative to the Cabinet.
Yeah, that's right, Menace. So listen, even within the first 24 hours of this deal being announced on Wednesday night by the Qataris, by Donald Trump, by Joe Biden, there were some stumbling blocks. Benjamin Netanyahu, originally resistant to actually agree, saying that Hamas had reneged on parts of the deal. Those parts of the sort of debate had been cleared up by this morning, which meant that Benjamin Netanyahu then was willing to bring this to a vote to the Security Cabinet. That is where things sit right now, and they sit within the Security Cabinet, and that is where you might find the next stumbling block. And this is an internal, domestic, political story within Israel, where you have this government, this coalition that has been propped up, not just by the Likud party, that's Benjamin Netanyahu's party, but two sort of right-wing parties, and who basically have not wanted to stop the war until Hamas is entirely basically wiped out. The question is if they would be willing to leave this coalition government. There have been threats to walk away if they agree to this ceasefire, but even in the event of that, Manis, this is a government that can continue to operate as a minority, and there is such intense pressure here in Israel, Manis. It's the first thing you see when you get off the plane in the airport, the posters of the hostages, to get this deal through, to get these hostages home, that is very likely to pass, and that would mean that on Sunday you would get the beginning of the first really durable ceasefire in this conflict in the last year and 3 months that could last 6 weeks.
There are other facets to the initial part of this ceasefire. One is aid and the withdrawal of troops. A quick update there.
Yeah, so listen, Manis, what we will get, the mechanics of what we actually get is on Sunday, you'll get the first hostages to be released. We understand there will be 3 women released on Sunday. Then that will also begin the release of prisoners from the Israeli sides onto the Palestinians. As you say, Manis, there's going to be sort of the release of huge volumes of aid. As we know, 45,000 people have been killed in Gaza. What there is also needed there is huge infrastructure destruction, and so you need to get those goods in. And as you say, Manis, critically here, this would mean that the fighting would stop for at least 6 weeks, and this would mean the withdrawal of Israeli troops from the center, the most populated parts of Gaza, to the eastern corridor, and that would potentially pave the way, as the brokers of this deal would like to see, to a durable peace. Whether or not that happens, Manis, is an entirely different question.
And there will be a trifecta of nations based in Egypt that will monitor this situation: the United States, Qatar, along with Egypt. So the roadway to a permanent ceasefire, this is critically important, policing this interim phase, isn't it?
Yeah, that's right. Absolutely. So whether or not the conditions of the ceasefire will be sort of held by either side, this, as you say, will be monitored by the United States, by the Qataris, by the Egyptians. And really the way that they presented this, the Qataris, but also Joe Biden, is that this is the first phase of 3 phases to this ceasefire. What they would like to see is not just a ceasefire for 6 weeks, Manis. They really would like to cast this as the beginning of the end of this war. But we know how difficult it has been to get to even this very first step, this very first part of the ceasefire. And frankly, the second phase and the third phase are not going to be any easier to arrive at, because it begins to bring up the thorniest questions at the very heart of the debate between Palestine and Israel, which is basically who is going to preserve the security guarantees in Gaza if the Israeli forces were to withdraw. How are you going to get a government in place that is both credible with the local people and credible with the Israelis? These are some of the most difficult questions to answer, Manis. And frankly, in order to get there, first of all, we need to get to this first phase of the ceasefire, but everybody's holding their breath, and that can get over the line. And you can at least get some prisoners and some hostages released and stop the fighting for at least 6 weeks.
Oliver, thank you very much. As we get more breaking news from that security cabinet, and the cabinet will bring it to Oliver Crook in Tel Aviv. To the commodity market, there's a number of factors at play. The oil market up by 1/8 of 1%, and New York crude up 1/3 of 1%. We're going for the 4th week of gains. Scott Bessent in front of the committee yesterday talking about sanctions and the propensity to raise sanctions. I will be 100% on board for taking sanctions up. This is on Russia. This is about delivering the potential deal with Ukraine. So that is a shift in the gears. We're expecting quite a heightened set of sanctions on Iran, Venezuela, and Russia. Gold comes back by 1/4 of 1%. Coming up in the show, China hits the growth target, but the tariffs are looming from the United States of America. We'll discuss. Context matters on Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
It's Bloomberg Brief. I'm Manish Cranny in New York. Your front pages from around the world. Let's give you a bit of a flavor. First up, Wall Street Journal leads with President-elect Trump's allies eyeing a last-ditch effort to save, you got it, TikTok. Trump's advisors are reviewing the law to find ways to push back the deadline by 60 to 90 days. Now, the ban is set for Sunday, but an outage could be brief if Trump proceeds with an executive order. Next up, Washington Post on SpaceX's Starship rocket exploding minutes just into its 7th test flight. The rocket was meant to attempt to reach orbital speeds, but it lost communication 8.5 minutes into the mission. Elon Musk attributed the failure to possible oxygen fuel leak and said that the next launch is on track for next month. And Bloomberg, we lead with the China GDP story. Growth coming in at 5% for the whole of 2024. That beat the estimates at 4.9%. The NBS stated the economy was overall stable and progressed with stability in 2024. Let's break down the numbers and get a little bit of insight. Noor Al-Ali joins me. Noor, you look at these numbers, I mean, it's described as recovering remarkably in the fourth quarter, 5.4%. How much of that is to do with the stimulus that we saw early in the Q4?
Yeah, absolutely, man. It's a bulk of it, right? It's that stimulus push at the end of the year that really boosted that fourth quarter GDP to 5.4%, which led to that 5% target being met. Again, we know that Chinese officials have reaffirmed that target again for 2025. And if you look at money growth trends, you're seeing that pull higher, and those typically lead the economy growth by about 3 months or so. So I am expecting some form of growth still, but of course there are a lot of challenges ahead, and we can discuss those in a sec.
Yeah, I mean, let's just talk about that. The risk is at a max level, 60% tariffs. That's what's been touted here in the United States. We won't know until perhaps next week. At 60% tariff to China, what would that do to the economy, to the disinflation? I mean, that would be pretty savage.
Yeah, absolutely, Manus. Look, we still don't know what kind of tariff or trade deal or trade situation is going to happen after Trump takes office. And look, his inauguration is Monday. We do have some Chinese officials also making their way there as well. That is obviously something that is on investors' mind today, because you've got, you know, the disinflation story, or the deflationary story, apologies, in China is still pretty strong. That, you know, consumption figure that we had, although it was pretty good in the fourth quarter and in December, those numbers were primarily due to those stimulus efforts. And a lot of analysts and investors are looking at those stimulus efforts, and they're thinking they've fallen a little too short. You know, we're not expecting to see that blowout earnings season as a result of these stimulus efforts. You also have, you know, a lot of concerns about the economy just as you go into these very complicated trade situations that, you know, put China at risk and the rest of the world as well.
So Xi Jinping's not going to the inauguration. I don't think anybody's shocked by that headline, but obviously what caught our eyes is the Vice President, Han Zheng, is going. So this is about the art of the deal take two, really, from the Chinese side. How much more progressed are they in dealing with this potential Trump administration the second time around?
Well, look, I mean, as you say, it's the second time around, right? So Chinese officials definitely, at least from a market's perspective, have a lot more experience dealing with Trump and understanding the trade situation after his first term. But if you balance that against the economic risks and the economic situation that they're going through at the moment, you know, it pretty much balances it out. And what comes ahead is a lot of uncertainty. You know, Chinese stocks did have their best week in about 3 months now. But I think the question here is, to what extent does that rally go, and when does the momentum really fade?
Okay, we're going to keep an eye on the currency. Yuan trading at 734. Big issue around the currency. Noor Al-Ali there. Coming up, Kathy Jones of Charles Schwab.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
From our global headquarters in New York, you're welcome to Bloomberg Brief. I'm Manish Granny. Let's set your agenda. Yields drop as Waller reignites early and multiple rate cuts, wrapping up a busy week of economic data and bank earnings. Right on track. Treasury Secretary nominee Scott Bessent clears a Senate grilling just days ahead of the presidential inauguration. And a crucial weekend for TikTok. The U.S. Supreme Court is set to rule on the app's shutdown as the incoming President Trump pledges an extension. Good morning. Ground zero for risk. The bond market. What a week. Down 16 basis points in total. We just had Tim Graff from State Street saying he would not be surprised if we get to 5.25%. You've got, by the way, T. Rowe Price joining Nomura, that you could explode to 6%. But right now, the bond market is taking its lead from the CPI numbers and from Mr. Waller yesterday saying, look, if the data rolls on as we've had, you could have rate cuts again as early as March and multiple rate cuts this year. It would take a lot to get there. But the equity market liked it. It's struggling just at the moment. We're up 0.4%. We're trying to wrap up the week to the upside. Bank of America, Michael Hartnett has come out and said, look, you're going to have a stable performance in the equity market. You've got the protection of Trump, and that protects the downside. The Trump put, in his view, lives large across these equities. JP Morgan say, for the bulls out there who hadn't had an opportunity, that quieter CPI is your opportunity to reappraise risk. And let's talk about the reappraisal of risk. Term premium, the extra premium you want as a bond holder to hold U.S. Treasuries, has exploded by nearly 85 basis points from the nadir in September. And this is what Kathy Jones, Chief Fixed Income Strategist over at Charles Schwab, is focused on. Kathy, a lot of the momentum in this term premium is, some would say, to do with the Fed, cut. It was a mistake. We've got fiscal angst and we've got tariff angst. How much of that angst is represented in that term premium right now? Is it fully charged for the risks?
Well, I think the term premium really reflects the fact that the path of Fed rate cuts, or the expected path, has changed quite a bit. And that's changed because of concerns about inflation, concerns about policy going forward. So it's all wrapped up in the term premium, which is why I like to watch it, because it kind of summarizes everything. But yeah, I think there's the stronger economy than we had thought just a few months ago. Inflation, albeit the CPI number was good, relative to expectations, you're still looking at inflation staying stubbornly above the Fed's target. It's going to take some time to come down. And then you've got all the policy uncertainty coming up as to what tariffs and immigration policy and potential tax cuts will do on the inflation side longer term. So the term premium kind of encompasses all that uncertainty. How much room does the Fed have to cut if all those things are going on in the background?
Were you surprised by Waller's comments yesterday? We know he's on the dovish side, but talking about as early as March and maybe multiple cuts. Of course, he was saying he's data dependent. He didn't mention policy. Well, not in that syncopation.
Yeah, I was a little surprised at how dovish he came off. Obviously, he represents a certain segment of the Fed that says, yeah, we still see inflation coming down. We still see room for further rate cuts, and as early as the first half of this year. He did caveat it a fair amount, saying if,
yeah.
Then
but that was data, not policy, Kathy. And I think we're moving into a policy, not data.
I would agree with you. I don't think the Fed is comfortable talking about policy until there's actual policy to talk about. So I think they'll hold off on mentioning that. But clearly they're doing some scenario analysis and trying to get their arms around what the implications are of policy. We just don't have anything really, fundamentally strong to go on yet. We have no specifics yet. In fact, the tariff talk is all over the place. We don't even have that yet. And that's supposed to be implemented right away.
Well, let's just dig into tariffs a little bit. Canada are already in $100 billion worth of boomerang tariffs. So immediately you get some quantification of the scale of the risk of boomerang tariffs, and that's a risk to inflation and growth, isn't it?
Yeah, it's particularly risky on the goods side because much of what we import is goods rather than services. So we know from previous experience that what happens is those goods prices go up because of the tariff, that most of that gets passed along to consumers. And then you have the retaliatory tariffs, and then you have the slowdown in the economy that goes with that because none of this is pro-growth. So, the more that it happens, the higher the tariffs, the more the retaliation, the more you have the risk of slowing down economic growth down the road. But in the initial phases, it does tend to raise price level, at least modestly or moderately on a one-time basis.
Look, this week has been a reprieve for the bond market, down 15 basis points. We've come off that. You know the fear that we had on Monday and Tuesday? We've repriced that. But I want to get a sense from you. Tim says 5.25 is eminently possible. Nomura say this. We posit that the 10-year U.S. Treasury yield still low in relation to the twos is the key driver. Consumer price inflation and fiscal balance. So it's about where you start. It's about where you start this new term of Trump presidency too. I mean, that's quite a aggressive call at 6%. What has to happen to break 5 and into that higher level? Is that a possibility? Are you thinking that that is a real possibility?
Well, we think 5 is certainly a probability, a reasonable probability, given where we're going right now. I think 6 is you have to get really a lot of inflation going and a big shift in Fed policy. So in simple terms, if you say, as we think that Fed policy gets down to 4%, the Fed funds rate gets down to 3 3/4 to 4%, roughly add 100 basis points, 125 basis points to that, you have kind of historically a level where the 10-year yield has traded. So that's 5 to 5.25%. To get to 6, you have to believe that we have enough inflation growth to propel the Fed to tighten policy in a reasonably short period of time. I don't think that that's very likely, given that although inflation might be sticky, it's not really going up at a rate that's concerning. And we do have a little bit of a slowdown in the labor market. So I'd be surprised if we have a turn and the Fed starts hiking rates, but that's how you would get to 6%.
Okay, let's hope we don't end up with that scenario analysis. Kathy Jones there of Charles Schwab. Other stories trending on your Bloomberg channel. This is how they look. Schroders plans to cut as much as 3% of the workforce as the new CEO, Richard Oldfield, looks to revive the asset manager. Bloomberg sources say the firm is cutting 200 jobs that are mostly in technology. Citi also eliminating more jobs, streamlining operations with the aim of increasing profitability. A security cabinet meeting is underway in Israel, and the latest headline says that the hostage release is expected this Sunday, pending approvals. Prime Minister Netanyahu had said the agreement with Hamas to pause the war in Gaza has been finalized, suggesting it's on track to begin Sunday. Bloomberg sources say Treasury Secretary Yellen's computer was infiltrated and unclassified files were accessed as part of a broader breach of the agency by Cheney's state-sponsored hackers. The operatives accessed employee usernames and passwords and over 3,000 files on unclassified personnel devices. Coming up, the path to the Treasury. It has been cleared for Scott Bessent. More on the confirmation hearing in just a moment. Context matters on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Here's Bloomberg Brief. I'm Manish Krenny in New York. Treasury Secretary nominee Scott Bessent is on track to be confirmed in the position of Treasury Secretary following his hearing yesterday. Here's part of what he had to say.
The United States is not going to default on its debt if I'm confirmed. The FOMC should be independent. I will be 100% on board for taking sanctions up, especially on the Russian oil majors. Americans are barreling towards an economic crisis at year end. If we do not renew and extend, then we will be facing an economic calamity. On CBDCs, I see no reason for the U.S. to have a central bank digital currency. I firmly believe that if confirmed, and with your counsel and support, we can usher in a new, more balanced era of prosperity.
Let's get to Washington now. Kate Ackley is with me, our government reporter. Kate, Bessent arrives with a very different set of baggage to Hegseth at the start of the week, and he really, really did make the priority of the Trump economic, the dollar was there, the deficits were there. This was a very different hearing, wasn't it?
Oh, absolutely. I mean, he doesn't have that kind of, I don't want to call it personal baggage exactly, but the scandal, if you will. And he talked about some of the policy priorities of the second Trump administration that also happened to align with Wall Street and the business community, and that's tax cuts, tax cuts, tax cuts. They really want to make that a big priority for this year when some of those of the 2017 tax law are set to expire. He also was really on message about growth. Growth is a priority. Growth will overcome any of the deficit and the spending problems. Tax cuts equals growth. You really saw him staying on message on those economic policy priorities.
So what do we think we're going to get in terms of executive order outside of tariffs and outside of immigration? He's going to lean heavily into Bitcoin. It's going to be the creation of a national Bitcoin stockpile.
So the people who are in Washington, lobbyists for the cryptocurrency and digital asset industry, they're almost giddy. They're really gearing up, though, for an extremely busy year, not just with executive orders and at the White House, where there's going to be the first crypto czar coming in. We've got a crypto inaugural ball on the lineup for this weekend, but they're also really pushing in a bipartisan way in this new Congress as well for legislation that looks a bit like what passed the House. It was known as Fit 21 that passed the House last Congress. Something along those lines we're expecting to see move potentially through the House and Senate this year with incoming President Trump's support from the administration.
Like, talk to me about the rally. We're going to have a rally in Washington on Sunday. This is very different to any other sort of inauguration rollout. You've got everything there. Hulk Hogan, apparently, and the Village People.
Well, the Village People, I think, were not at the Republican convention, but Hulk Hogan, of course, was a big star in Milwaukee over the summer when Republicans had their presidential nominating convention. So it makes sense that he's back. He was, like I said, a big star in that event on when President Trump, or incoming President Trump, accepted the Republican nomination. But it's going to be a big scene. It's going to be on TV and grab a lot of headlines. But I also wanted to point out there are going to be just loads of events, many of them corporate sponsored. You have big business and you have big business moguls, whether it's Mark Zuckerberg from Facebook, Meta, Amazon, other companies that have contributed to the inaugural fund. And you have private parties and big balls happening all over town, all through the weekend. It's not just on Monday on Inauguration Day. They're going to be happening Friday, Saturday, Sunday, Monday, late night parties, filled with corporate executives, lobbyists, members of Congress. It's going to be, one lobbyist told me it's going to be one big party the whole weekend.
Well, I hope that you've got the tickets and the invitations, and make sure you make it to work on Tuesday. Kate, thank you very much. Kate Ackley in Washington. Let's stay with Washington. It is pretty much a make-or-break weekend for TikTok. The U.S. Supreme Court ruling is set for 10 a.m. Eastern. The ban in the U.S. is scheduled to kick in on Sunday, but President-elect Trump has vowed to give the social media app more time. How can he do that? Tamlin Basin of Bloomberg Intelligence is with us. Tamlin, what exactly? I mean, look, there's bipartisan support for some kind of reprieve. So there's support from all sides of the House. What can they do to delay the January 19th deadline?
Yeah, sure, man. So we don't think that they can do all that much to delay this January 19th deadline from taking effect. But what we are seeing is a little bit of momentum, again, on a bipartisan basis. They really gotten in action last night when we saw Minority Leader Chuck Schumer say that he favors a delay. Now, what this would be a delay would be to find an American buyer for TikTok. Now, again, I don't think there's going to be enough time to get anything passed to delay that January 19th deadline. So most likely that law is going to take effect on Sunday, and then we might have a reprieve early next week through sort of a bipartisan basis at Congress.
Look, the Supreme Court's expected to rule today. What is the best case scenario? Is there a caveat they can deliver? Is there a verbiage that they can deliver?
Yeah, so the best case scenario for TikTok would be winning on the merits, would be a Supreme Court saying this was an unconstitutional law. Now, if we paid attention to last Friday's arguments, and it definitely did not seem like 5 justices were siding with TikTok. So potentially what they could do is say, we're not necessarily going to rule on the merits right now, but we are going to delay the ban because we do have some questions on this. So I think that would give TikTok a little bit of time. Again, we're going to have to wait and see this morning when the court releases its opinion if there's enough there to save TikTok in the near term.
But then, of course, Trump has floated the idea of an executive order to save TikTok. You think that'll just be a simple announcement, or will it have complexion as well?
I think there would be a bit of complexion, again, because an executive order isn't necessarily going to override the law. So what it can do is say that maybe we're not going to enforce this law while we work towards other options. The question for the companies that are hosting TikTok is whether they're going to rely on that. They're a massive liability if you violate this law. It's hundreds of billions of dollars. So the question is going to be, are these technology platforms, are they going to stop hosting TikTok? Are they going to pull it off the app stores based on this executive order? And I think that's a pretty difficult call for management teams.
Tamlin, thank you very much. Tamlin Basin there of Bloomberg Intelligence on TikTok. Let's see what happens. We'll be back on Tuesday and we'll let you know the outcome. Let's turn our attention back to the confirmation hearings, because when asked about Russian oil sanctions, Scott Bessent answered that he would support dialing them up to end the war in Ukraine. Let's get to Will Kennedy. He is our Senior Executive Editor for Energy and Commodities, joining me now. Will Bessent, verbatim, I will be 100% on board with taking sanctions up. Now, this was a little bit of not so much of a shock. He didn't name the names in Russia, but this just shows you we're going to a new level, a potential new level of stick rather than carrot to try and draw close to the Ukraine-Russia conflict.
That's right, Manus, and I think what we should take away here is that oil sanctions are definitely seen by the Trump team as part of the toolbox as they work towards their aim of ending the conflict in Ukraine. We also ran a story yesterday trying to talk people through the thinking inside the Trump camp. And yes, ratcheting up sanctions to put pressure on Russia is definitely one option, as Bessent said yesterday, but they're also thinking that if it helps get a deal, they could show some goodwill and by going a little bit softer on oil sanctions. So I think what people should take away is, as we get into the new administration, as we look perhaps towards an end to the war in Ukraine, oil sanctions on Russia are going to be a part of that conversation and a part of that process.
Describe the state of the Russian oil industry at the moment, because we saw the Biden administration go after the tanker fleet, the shadow tanker fleet, the insurance side of the business. If the Trump administration escalates, it will probably involve the name Rosneft, which they did not name by name yesterday. So what shape is that industry in?
Well, broadly, the Russian oil industry has come through the last 2 and a bit years pretty well. It is managing to hold production pretty close to highs. It's exporting a lot of oil. It's having to use a shadow fleet to do it and change the way it trades and exports oil. But that oil is finding a market in India and China. Before we get to the Rosneft question, though, I think the point is that the sanctions that the Biden administration introduced earlier this week, they are very material. And I think that a lot of people, when they look at those sanctions and doubling the number of tankers that will be placed under sanctions, think that it will materially, at least in the shorter term, really impact their ability to export oil. So I think these current sanctions are a step change. And clearly, if they did do what Bessent said yesterday and sanction oil majors, i.e. Rosneft, as you say, then it would ramp it up further still, and then you are getting into a situation where sanctions probably are cutting exports from Russia.
Very briefly, this was supposed to be the year of surplus. If this next administration goes more max sanctions on Iran, Venezuela, and Russia, that changes the narrative and the discussion, Will, doesn't it?
Quite possibly. I think there are 2 variables, though, before we can answer that question for certain. One, of course, as always, is the Chinese economy. Clearly, Chinese oil demand disappointed some people last year because of the general weakness in the wider economy and maybe some structural shifts to do with EVs. Does that continue or does it pick up? That's one question. And then if we have these sanctions on those 3 countries that you outlined, does OPEC respond? Do they put more barrels into the market? We don't know the answer to that.
Well, thank you very much for being with me this morning, Will Kennedy, on the Scott Bessent hearing. Coming up, President Trump gears up to return to the White House. We'll give you the context.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's Bloomberg Brief. I'm Manish Cranny in New York. I look at the rest of the weekend for you, and it's a pretty packed one. In terms of data, U.S. housing starts and building permits, 8:30 a.m. Eastern today. And then it is the confirmation hearing for the Secretary of Homeland Security nominee, Kristi Noem. That's at 9 a.m. Sunday, the incoming president holds a rally in Washington, plus the TikTok ban will kick in if the Supreme Court doesn't take action. And there are some individual stock that you got to keep an eye on. You got Lam Research raised to overweight there, and you got that's at KeyBank. And $95 is the target for them. Applied Materials also raised to overweight at KeyBank. Price target $225. The analysts there are saying the industry target of $1 trillion in semi-sales by 2030 is on track. JB Hunt, you share a slide after the quarterly profit trails estimates. Now, we've just finished the conversation about oil, but this is really where you want to focus your risk. We're into the fourth week of gains. Scott Bessent is prepared. I will be 100% on board with taking sanctions up. What does that mean? Could it be to Rosneft? Keep an eye on copper. You're up the longest winning streak since 2017, 8 days in a row on the back of that China GDP coming in at 5% for 2025. But I want to go to the bond market because this is what really matters. This week has seen a considerable repricing, down 16 basis points. I've had two conversations. State Street say 5.25% is eminently possible. And we've just had Kathy Jones from Charles Schwab. She's basically saying, yeah, 5.25, but it's going to be darned hard to get to 6.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy
what's the best piece of advice you would give to someone young who wants to make a difference, actually, in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power, live around the world, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Markets pricing in just the right stuff coming out of D.C.
We've always viewed policy as either an accelerant or a dampener. By itself, it rarely makes trend.
The engine of the car, being the consumer, looks completely fine. Is it going to get turbocharged by some of these policies? I think that that's probably a risk that we can't dismiss.
We're in this really sensitive period of time right now. The markets are really walking on pins and needles.
There are these exogenous shocks that are going to disrupt the cycle that we're currently in. We don't know the probability and we don't know the size of them, but we know that they are coming.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday poised for the best week of gains since election week. That big, decent week of gains, and the first week of gains on the S&P of 2025 so far. We had some weight to it. Up a third of 1% on the S&P 500. On the NASDAQ, up by 0.4. Encouraged by earnings and the economic data. Still nervous about what might change on Monday.
That's right. Monday is just going to be almost a whole new world. We're going back to the Trump era. And we got a little bit of what policies might be so important to the incoming administration. Yesterday, when we heard from Scott Bessent, who's going to likely sail through confirmation and become the next Treasury Secretary, he did say this. This is the single most important economic issue of the day. This is pass-fail. He was talking about extending TCJA. Wall Street Journal, though, reporting that on some other measures, Trump might leave Congress behind and go full throttle on himself. And what we're hearing, or we're seeing in reports, is almost 100 executive orders, Jonathan, in just the first few days.
And nothing to upset the bond market so far. For a third consecutive session, bond yields are lower. The 10-year yield this morning is down a basis point or two to 459.66. We haven't seen a three-day winning streak on a 10-year maturity since early December. Governor Waller, super dovish.
Very
yesterday.
dovish, saying that we could possibly get a cut in the first half of the year if the data continues as is. Of course, reliably, that comes out, and then you get all the commentary, oh, is he just auditioning for the Fed chair? I don't see why both can't be true. Why can't he be dovish and doing that? I think we need to remember, in 2023, Waller was the bellwether. He flipped to dovish. The rest of the central bank followed him. I think it's important to listen to Waller, not just write it off as him campaigning for the Fed chair.
He sounds like an outlier, though, and that's the issue, because a lot of other Fed officials are concerned about policy changes in the year to come. We know the banks who think we get no rate cuts this year. Deutsche Bank, Bank of America, Mizuho, RBC, BNP Paribas expecting no cuts in 25 based on what? An inflationary upsurge from the new administration's policies, and that's what we've all got to watch through the next few weeks.
And then you get someone like Kevin Warsh writing an op-ed who has also been tilted as potentially the next Fed chief, saying that the central bank is being too political, that they are using tariffs, and I guess you could wrap in that market participants too, as a scapegoat for possible inflation, saying that that's not what the central bank should be doing. They need to be smaller, and maybe that added to the bond market rally too, that's the kind of Fed chair we could get.
We're 3 days out from Trump being inaugurated, and where do we have a race for the Fed chair? But if you go back to how this incoming administration might use tariffs, which is something Kevin Warsh talked about in the Wall Street Journal op-ed, he was saying that Trump's economic policy is not just about tariffs. it's more than tariffs. Yesterday, Scott Bessent, when he talked about tariffs, he said, one, it's to address unfair trade practices. Two, broad tariffs could be revenue raisers. And three, they could be used as a negotiating tool. Basically, everything's on the table.
Lots to talk about this morning. If you are just joining us, welcome to the program. Equity futures up by 1/3%. Joining us through the next 60 minutes or so, we'll catch up with Christian Nolting of Deutsche Bank on a challenging start to the year, Isaac Vortansky of BTIG as Bessent clears his Senate confirmation hearing, and we'll catch up with the brilliant Erica Najarian of UBS following strong Q4 bank results. We begin this hour with stocks positive, investors looking ahead to President-elect Donald Trump's inauguration on Monday. Christian Nolting of Deutsche Bank writing the following: expectations for higher public deficits and uncertainties about announced tariff policies drove 10-year US Treasury yields higher since the start of the year. Consequently, it has been a challenging start into 2025 for equities. Christian joins us now for more. Christian, welcome to the program, sir. Let's forget the data. Let's forget the earnings. Let's talk about day one of the Trump presidency. What are you expecting to change, sir?
Yeah, I think if you compare this to, say, 8 years ago, I think now the government is nearly already in place. So we have all the Congress hearings, of course, obviously. So it's an earlier start, I would say, than 8 years ago. And of course, there will be discussion about tariffs, how they implemented. Is it high or is it step by step? I think then a lot of, as you rightly said, right, executive orders to come in. I think to look through this a little bit, we, as I wrote, think that some of these policies at the beginning might be indeed inflationary. And I think that was one reason why we saw that increase in yields, which we actually predicted correctly, hopefully. And from that perspective, yeah, to come down a little bit in yields helps markets. So we have a very good week. But we shouldn't forget there are some policies, and by the way, not only in the US, there's a lot of fiscal policy, but also globally. No one is talking about austerity from my point of view. And hence, we see that little bit higher yields and hence less Fed cuts, less cuts probably also of the other central banks.
Christian, what did you make of Scott Bessent's hearing? Is there anything in there where you're leaning in towards to understand potentially what Trump 2.0 could look like?
Yeah, from my point of view, what is important really how they start with the tariffs. Is it high and then going lower, as I said, or is it step by step? So that's not quite clear. I think that's quite interesting. Maybe we know more already this Monday. And I think then from our point of view, I think it's a continuation of policy. I think there was not so much surprise from the hearing yesterday to the markets, which I think is good news from my point of view.
Do you think the Fed will look at Trump's tariffs and think they're a one-off hit when it comes to inflation, or that potentially this could be more substantial?
Yeah, again, it's about the structure, but of course the Fed will look into that, right? So they have the growth goal, they still have the price stability, the inflation goal. Yeah, they will look at this. And of course, they need to take into account what's the inflation expectation, what's the inflation outlook. And I'm in the camp that tariffs are inflationary. Not everyone is. I am, at least at the beginning, until things might adjust. And they need to figure that in. And I think it's not a surprise if it comes. So sure, they will look at this for sure, yeah.
Well, Christian, then maybe the market reaction has been very logical of higher yields, stronger dollar. But then one thing hasn't quite been logical. The idea with tariffs enforces that American exceptionalism. But today we're seeing the FTSE 100 at a record and the DAX at a record. What do you make of that?
Yeah, so being in Germany, maybe the mood on the economy might not be the best at this point in time. But if you look at the DAX index, 84% is not Germany, it's global, right? So if you look MDAX, SDAX, a smaller index, that performance is not as stellar as we do see here. So these companies are global and profit then a little bit from US exceptionalism as well. So in Germany is doing much more with the US than with China. That has completely changed. And from that point of view, also here in Europe, we have now seen that luxury goods had a boost, and that was not coming from China. Maybe it's more coming from the US side. So there's also a global phenomenon we should not rule out from that point of view, and we have to watch this. So that's not only positive for the US, it could also be positive even more globally.
Well, can't we flip that on its head, Christian, and say in the S&P 500, 41% of the constituents get revenue from Europe? Shouldn't they then be under pressure?
Well, as long as you're global, I think you have growth, right? So it's really to the smaller companies in those economies who do not do very well, like here in Germany at this point in time. That could change, but I think that trigger, which is necessary then, also is to get some fiscal policy probably over here in Europe. So as you have had the elections already last November, so we are here in Germany going into elections next month, and maybe that could be a trigger for some fiscal policy. And then I could say, as you rightly said, 41% is Europe. maybe then you see more investors coming to Europe as well if they do see some fiscal policy. But I think they want to see that executed, and then the so far, say, called unlike Europe could also come up with some better performance from my point of view. But it has to have a trigger, obviously.
Christian, I'm really pleased that Danny brought this up. Expectations coming into 2025 were really downbeat for European equities, very upbeat for US equities. The Euro Stoxx 50 is up 4 straight days, and it's up around 4% in that period. And some people are starting to ask the questions that Danny is asking. What needs to go right to keep this trend intact? You talked about fiscal stimulus. Now, we're sitting outside of Germany, wondering if the mood is changing around that story. You're inside Germany. Can you give us a flavour of the conversation? Are they actually open to doing more?
I think it's a political topic, right? So is Germany ready to do more? There's elections, obviously, in 37 days, not too far out. And the new government, the question is, are they ready to do more? I think they need quite a majority on this. So there's all this discussion about the debt brake. You need a 2/3 majority. And we need to see, is the German electorate ready to give a 2/3 majority to that government, or can they create that 2/3 majority? So I'm not talking about the seats, but the parties in the parliament. So can they be blocked by 1/3 of the very left or very right party? That's the question I think we need to watch. I think some fiscal policy could be doable. There's, I think, some money around, to be very honest. But I think before the election, that won't happen. And until then, people will wait and watch. Good news for Europe, as I said, luxury goods did very well, which was a driver and a boost in the Euro Stoxx 50. And yes, you see indeed some outperformance year to date compared to the S&P 500. But if you look at productivity gains, if you look at the investment money, if you look at research development money in absolute and relative terms, is still pro-US. So I wouldn't change the call at this point in time. I really would like to see some change in Europe first before we change that call.
Granted, it is only January 17th, so I appreciate that, Christian. Appreciate your time as well. Christian Nalting there of Deutsche Bank. Thank you, sir. I'm on the same page, seeing the same story. Record highs on a FTSE, elsewhere on the DAX, 4-day winning streak on Euro Stoxx 50.
It's really impressive for a region where optimism had essentially vanished. And maybe this showed us just how low the bar is. It's not only the fiscal developments that are getting better, but maybe it's getting some help from macro too. In the UK, finally having CPI come down. We talked about the accounts yesterday. ECB officials wanting 50 basis points of cuts. When things are so dire and you're so concerned, maybe you don't need that much to launch you to all-time highs.
Equity futures stateside doing better as well. We're up by a few tenths of 1% on the S&P. Let's get you an update on stories elsewhere. Here is your Bloomberg Brief. Israel finalising an agreement with Hamas to pause the war in Gaza, suggesting a ceasefire is on track to begin on Sunday. The deal includes Hamas releasing 33 hostages, Israel withdrawing troops from populated areas, and freeing around 1,000 Palestinian prisoners. Elsewhere, Bloomberg News learning Treasury Secretary Janet Yellen's computer was breached by Chinese hackers, along with those of her 2 top lieutenants. Our sources say fewer than 50 of Yellen's files were accessed and nothing classified was taken. And finally, firefighters in Los Angeles getting a reprieve from the strongest winds today, but the National Weather Service saying dangerous conditions are expected again next week. At least 27 people have been killed and 60 square miles have been charred in the wildfires. And that is your Bloomberg Brief. Up next on the program, an economic calamity.
If we do not fix these tax cuts, if we do not renew and extend, then we will be facing an economic calamity.
The latest on Capitol Hill up next on the program, live from New York City this morning. Good morning.
Is this real momentum from Wall Street? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Live from New York City, welcome to the program. Equity futures right now up 1/3 of 1% stateside. Check out Europe. Danny's all over it. The FTSE at a record high, up by 1 full percentage point. Yesterday, Richemont with some decent numbers, spurring, igniting a massive rally in the luxury players across the continent. And the Euro Stoxx 50 is up by something like 4+% for the year so far.
And I have to say, I talked about all the great things, not great things, but I mean, marginally better things happening in Europe for them. We also need to acknowledge that it's the U.S. also helping. It is CPI coming in a little bit softer, giving both central banks and fiscal policymakers more headroom. That's a good thing for their equity markets.
The data's better, the earnings have been decent, and I think we've stressed this repeatedly. Things can all change on Monday and the following week. Under surveillance this morning, an economic calamity.
This is pass-fail. That if we do not fix these tax cuts, if we do not renew and extend, then we will be facing an economic calamity. And as always, with financial instability, that falls on the middle and working class people.
Here's the latest this morning. Trump's Treasury pick, Scott Bessent, urging Congress to extend 2017 tax cuts, warning their expiration would mean an economic crisis. Bessent appearing on track for confirmation without specific objections from Democrats during yesterday's hearing. Joining us now, Isaac Boltanski of BTIG. Hey, Isaac, welcome to the program, sir. We need to talk about executive orders and Trump Day 1. I just want to get your thoughts on yesterday. How do you think Scott Bessent did?
Look, I think it's clear that Scott Bessent is a mind at work, and I think that markets should be heartened by that, as I think all of us would like a steady hand in that role, someone with his experience in the Oval Office advising the president. But John, let's not kid ourselves, right? We are still going to be living and dying day to day by whatever Donald Trump is typing out on his phone's keypad. So I think that it's heartening and positive, and Bessent's going to be easily confirmed, and he's going to be a stable voice in the Treasury Department and ultimately in the Oval Office advising the president. But the president himself is going to decide what tariffs are going to go into place and how those are going to be communicated to the market.
So we're expecting some 100 executive orders after Donald Trump is sworn in. Isaac, what do they look like?
I think it's going to be a busy day. I think that there's an enormous amount of anticipation around what we're going to see on Monday. I do want our clients in general to be aware that just because it doesn't come out Monday doesn't mean it's not going to happen. I think that there is a bit of a logjam there in terms of all the different things they want to do. From my seat, I think you're going to see a fair amount of paper focusing on immigration and border security. I think that that's one area where he's consistently said he wants to focus, and I think that there's some administrative levers that he can pull. My cautionary point there is I think that that's going to be one area that you see heavily litigated. So that's one area and one dynamic that we're aware of. I think you're also going to see a fair amount of orders on the energy front and the healthcare front. Those have less risk of litigation, generally speaking. So we'll be keeping our eye on that. And of course, there's a lot of signaling, Anne-Marie, right? We're going to have a lot of things that don't actually have teeth, a lot of things relating to the culture wars and things that I don't think that the markets are going to have to worry about all too much.
And the signaling's on the other side as well. Biden is continuing a ton of executive actions, even as staffers are starting to pack up their offices currently, right now. When it comes to tariffs, though, will we get executive orders next week?
I think that we're going to get a few. And look, my base case here is still that there's going to be an overarching incrementalism to the tariff policy from the Trump administration. I think that they are cognizant of the economic impact. And I think ultimately they still want tariffs to be used primarily as a negotiating chit. And the way that I think about this is for those negotiating chits to have any value, you still need to prove that you're willing to shoot the hostage, if you will. And so from a framing perspective, I think that ultimately they will move quickly on instituting new Chinese tariffs, likely using Section 232 or Section 301, which takes a few months to get there. And then maybe a few acute areas where they focus on issues that they have a fair amount of political backing for, things like going after European autos. But I don't expect the broad-based universal tariffs to be where we start from.
You make a good point that this is really year 5 of Trump, not year 1. But what is going to be different from 1.0 to 2.0?
Yeah, look, I think Anne-Marie, it's a lot of amplification, right? So we know there's going to be a deregulatory agenda. We know there's going to be a focus on tax cuts and border security, but there's an amplification of some of those issues. So on border security, it's not just focusing on the border, it's also the deportation dynamic that's in play. On the tariffs, I think that they have more of an awareness of the different tools, which is why you're hearing so much more about IEEPA, which allows the president to impose tariffs based on national emergency. That's something that they didn't really get their arms around until probably halfway through the first term. So in general, I would just say it's more awareness of the levers of power, and then also it's the personnel they have around them. You have very well vetted, truly loyal folks around the president, which should allow them to move a little bit more quickly, and I think ultimately avoid some of the potholes that they fell into during the first administration.
Well, Isaac, to your point, though, they need to show a willingness, in your words, to shoot the hostage, to do the most of extreme measures in order to use it as a negotiating chit. Do you think that that's well enough appreciated? Is this an administration that would be willing to go to the extremes?
You know, look, it depends. It depends which client I'm talking to, but I think that there's at least an awareness that the China tariffs are something that he is absolutely serious about. There's a fair amount of debate among the client community that I speak to as to whether there can be a grand bargain with China over time, but I think that we need to have that as our base case, that China is going to be where he moves quickly. Canada and Mexico, I truly think, are more about a conversation, more about one-off negotiations than anything else. And on the European side, I do think that he is a true believer, especially on the auto story. So I think what we have now is sort of trying to understand that bridge from rhetoric to reality and trying to get into Donald Trump's mind and the mind of those who are running this administration as to what they're really going to prioritize. Because it's clear they can't do everything. So what is their prioritization hierarchy on tariffs?
Well, as Anne-Marie started this hour saying, Scott Bessent yesterday laid out several different use cases for tariffs. One of them that seemed to keep coming up was this idea of tariffs as national security, that sanctions pressure the dollar and its reserve status, and it makes more sense to use, therefore, instead tariffs. When it comes to China, Isaac, what is the strategy? Is it negotiation, or is it one of national security, and that's why tariffs would be put on?
Yeah, look, I think that it's a full court press. That's how I think about it. And I think that there's more awareness here than there's ever been in terms of we need to have more of a holistic approach in terms of our competition with China. And you heard it yesterday during the hearing. I think it was noteworthy to hear how much was referenced in terms of our outbound investment screening. Look, we have screening for if foreign entities want to buy interests in the U.S., we should also have some awareness and some say as to outbound investment and what that means for acute areas of competition. And I think that it's one of the few areas of bipartisanship. And so we've got to be aware of how that's playing, not just politically, but also operationally in terms of the different levers of government they have, from CFIUS, which we've seen with the U.S. Steel deal, to acute areas of legislation like we've seen with the TikTok ban.
Isaac, the horse has bolted. The technology's already lost. I wish we were having this conversation 20 years ago, but we're not. And then I started to hear things like the TikTok CEO's coming to the inauguration. She's invited to the inauguration, not turning up, by the way. Isaac, what is going to be the approach to things like TikTok? If it is seriously a national security risk, and Chinese hackers have infiltrated the Treasury, and they don't care who's in charge. They could possibly do the same thing in the incoming administration as well. I don't really understand what the holdup is.
Well, look, I'm confused by Congress passing a bill saying that they want to ban TikTok, and now at this 11th hour, seeing many of those lawmakers from both sides of the aisle retracting their previous statement and saying we would love a reprieve. We would love to find a way to push this ban out. And so I think that there are always those political wins, which are tough to dissect. But by and large, when I try to step back and say, what does this actually mean for markets? What does this mean for investors? Is one of the persistent tailwinds that I see from a spending and a appropriations area is we're going to spend a whole lot more money on cybersecurity as a federal government. There's going to be a whole of government approach to cybersecurity that is frankly 20 years too late. But in terms of areas that clients ask, where are we going to plus up spending? Yeah. Where are we going to spend more and more, no matter who is in charge of that pen? It's cybersecurity and overall just defense and national security.
Forgive me for putting you on the spot, but what do you actually think happens with TikTok in the next week, Isaac? What's your base case?
Look, I think that we're going to get the Supreme Court order today. They have a release this morning. My base case has been that when you can bet on D.C. taking longer than it should, it will. I think that the Supreme Court is likely to say that they're going to continue deliberating on this. There's going to be a temporary injunction for a couple months while they do so, and that we get their order. I think ultimately upholding the statute, which is negative for TikTok, but we're going to have to wait a couple months before that comes out.
Isaac, good to catch up with you, sir. Appreciate it. Busy week next week for sure. Thank you. Isaac Boltanski of BTIG. Some big changes through the next week or so.
Well, Ed Mills was saying how we can get the Supreme Court coming down, upholding the law passed by Congress, but then Trump comes in and gives an executive order and gives himself 90 more days to potentially find this off-ramp where they could be sold. So potentially we have a Supreme Court today making this decision. We'll wait and see. But they could uphold the ban. Shou Chew, the CEO of TikTok, shows up to inauguration Monday, sits on the dais, and then, of course, Tuesday, maybe there's 90 more days reprieve.
Before we get to Monday and Tuesday, do we know what happens on Sunday, on the 19th? Do we know what happens with the app?
Well, TikTok, according to the information, had threatened to shut itself down. Biden has made very clear, though, that that won't be the case. I don't know how you read this in any other way than TikTok called DC's bluff. They called their bluff. They said they'd shut down. TikTok isn't looking for a buyer. Yeah, we had that kind of trickle of information from China, but they basically said, we want to continue on as is.
And China's now using it as leverage and potentially hand-picking who they're willing to have this off-ramp given to.
Amazing. More on this story in just a moment. Coming up next, we'll also catch up with Erica Najarian of UBS on a record-breaking year for the big banks on Wall Street. That conversation is just around the corner. Equity futures on the S&P 500 positive here by 0.33%. We are almost there to the long weekend. It is Friday. Good morning.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but I can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're an asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I never Go.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Equity futures on the S&P adding a little bit more weight to this week's rally. High up by 0.4% on the S&P 500. On the Nasdaq 100 up by 0.5. In the bond market, something we haven't seen since early December. 3 consecutive days of falling yields. On a 10-year, we're down 2 basis points, 4.59. At the front end of the curve, anchored at 4.23. And in Europe, something we haven't seen since December 9th. 4 consecutive days of gains on European stocks. The Euro Stoxx 50 up by 0.75%. The euro, a little bit firmer. I get it. It's January 17th. It's too early to get excited, but some outperformance on European equities so far this year.
Big outperformance. You have the FTSE and the DAX hitting a new all-time record just in the past day. These are two markets, if you would say, okay, what's going to happen to them if Donald Trump is going to be president? Your assumption would be that they would underperform. That's not what happened. They get a boost because sentiment was so bad, perhaps, but they also get a boost from better U.S. economic data, helps kind of ease the yield differentials, and really strong earnings from those multinational companies, luxury in particular.
Yeah, Richemont, fantastic in the past 24 hours or so, though we should stress once again, this can change with a tweet, a post, in the next week or so. Under surveillance this morning, Chinese President Xi Jinping is not attending US President-elect Donald Trump's inauguration on Monday. He's sending the vice premier instead. China's foreign ministry saying it wants a stable, healthy, and sustainable relationship with the United States.
Just as an olive branch, Xi Jinping is not coming, but he is sending a deputy and a high-level deputy. This is the vice president instead. Most usually, I mean, going back, I think, to the 1800s, only ambassadors show up, lower-level dignitaries. So it is interesting that China is willing to acquiesce to Trump's invitation and say, well, Xi Jinping can't come, and that would be a security nightmare, by the way, but we are going to send someone high-level. But, Jonathan, you hinted at this earlier. What is going to be, then, the path forward to negotiating with China? You're talking about 60% tariffs on Chinese imports. At the same time, you're saying, well, actually, we also want you to come for this big party.
I also think it's interesting, Isaac Boltanski of BTIG made the point that on the executive orders he's expecting next week, he thinks the focus will be on things like immigration. I think the market might take that as maybe a good sign that the focus won't be on trade. I would stress it's still early days, that they're still getting their ducks in order, and it looks like, and you've been reporting on this, that there still hasn't been an agreement on what the ultimate approach will be.
That's true, and some of these proposals have yet to even go in front of President-elect Donald Trump. We have to come back to the fact that there's competing differences, competing rivals within the Trump administration of individuals who, like Scott Bessent, thinks it to be a gradual approach, individuals like Howard Lutnick, who thinks you should go for a blanket approach. Peter Navarro is back. This is someone who's very critical on China and on trade.
Well, the market has shown a really substantial and impressive ability to kind of overlook all of that and just hope for the best. The fact that we've got this rally leading up into Monday, leading up into the inauguration, some 20 basis points. Yes, it's on the data. Yes, it's on Waller. but you don't really see that fear in market at this moment. Ian Lingen of BMO writes, maybe that this is just seen as an event risk, that we literally just need to get past Monday, whatever it may be, and then we can be off to the races with the bond market.
And it's not necessarily a bad thing for equities either when it comes to trade. Stocks have moved up and to the right since 2016. Even with a pandemic, we're a whole lot higher than we were back then. And the Democrats kept all of these tariffs anyway on China, and this economy is still doing pretty well.
What I found interesting was what Mr. Bessent was saying yesterday regarding tariffs. Maybe they'll use tariffs with adversaries more so than sanctions. And also, he did talk about that it can be both. You might use it as a negotiating tool, and for some countries, it might be a blanket.
Speaking of Bessent, appearing on track for confirmation after his Senate hearing in the last 24 hours, Bessent signaling full alignment with Trump, urging Congress to extend 2017 tax cuts and warning their expiration would mean an economic crisis. So I think we know where his focus is going to be on day one.
On tax policy is going to be huge because they have to extend these tax cuts or the rates go up. And that is why he said this is the single most important issue, pass, fail. It has to be dealt with this year. This is the timeline.
That's the focus for Bessent. Here's the focus for others. TikTok facing a Sunday deadline to find a new buyer. The Supreme Court expected to rule on the ban later on this morning. Trump's incoming national security advisor telling Fox News Trump will keep the app from going dark.
It's not even on the Trump team. It's Chuck Schumer, too. It is also the Democrats. Something that was bipartisan against TikTok existing.
I don't get it.
But it's TikTok calling their bluff. I mean, this is what it is, right? The amusing thing about Chuck Schumer was he wasn't necessarily saying, oh, I kind of backtracked. He just said, oh, we need to give TikTok more time to find a buyer. They've had since April of last year. Time is not the problem. TikTok doesn't want to sell itself to an American buyer. They've put all of their eggs in one basket and trying to fight this law, and for now it seems to be working.
Well, that's the executive order you can almost guarantee, because Mike Waltz, when he was on with Bret Baier, was talking about the fact that I don't want to get ahead of it, but we want to put a deal in place. It was so interesting hearing him really tone down his national security concerns of TikTok. He still says he still has them, but they want to find basically an off-ramp. I find this interesting. This is a little bit of Washington nuance, classic DC punt it. While no such deal is imminent, Biden administration officials have told Bloomberg that because the Sunday deadline is a holiday in Martin Luther King Jr., it's a federal holiday, essentially that puts the enforcement to the next administration. Is that maybe just a little bit of fudging? What do you think?
I can't with these guys. There is zero consistency on this issue.
Can I just say Biden has shown no reluctance to issue orders and put in policy in the run-up to Trump, yet this is the one thing he's chosen not to.
This is the big one. It's TikTok. Apparently. Earnings season is well underway, with the biggest banks on Wall Street posting a clean sweep of beats. JP Morgan becoming the first bank in U.S. history to top $50 billion in annual profit. Erica Najarian of UBS with the quote of the week, JP Morgan is a broken record, so to speak, but a broken record that consistently only plays melodies of revenue beats and forward upward revisions on profitability. Erica joins us now for more. Erica, welcome to the program. What stood out for you? What encouraged you the most about the year ahead?
Yeah, what really encouraged me about the year ahead is we heard a word that's not typically associated with banks, at least not for the past 15 years. It's the G word. It's the word growth. And so, you know, whether it's JP Morgan, who's been so consistent about this, or Bank of America, or even a Wells in a city, that quote melody of growth, not to be all dramatic about it, was really sort of playing consistently throughout earnings season. You heard that with Goldman and Morgan as well. So that was really unique because, you know, the story on these banks have been valuation, cycle, rates, and the fact that they're super excited and they have the excess capital to go forward in an economy and a capital markets that's this strong, that was really encouraging.
One of the things, Erica, it was across the board that earnings looked strong. Investment banking was no exception in that regard. It was fascinating that Wells Fargo also had such strong investment banking results. I think they had a growth of 59% of deals in the fourth quarter, a bank that traditionally isn't a big player here. What does that tell you, that Wells Fargo is getting into the action in a big way?
Yeah, it tells you really two things. Number one, I think Wells Fargo is a little bit undersold in terms of their ability to do that, because keep in mind, they're a top 3 lender to businesses in the United States. So they have all these balance sheet relationships. And, you know, in the past, they hadn't taken enough advantage of it. The second thing this tells you is that Charlie Scharf, that relatively new CEO, is doing the right thing. And he is not only trying to fix the company, but at the same time, really trying to invest back into revenue generating businesses. I think that's really good news all around.
If this had been a year ago, instead of optimism and deal making coming back in a new administration, the buzzword would have been AI. We got that maybe not in the earnings, but Erica, David Solomon had an interview with the FT where he said AI can now draft 95% of an S1 IPO perspective in minutes, a job that used to require a 6-person team multiple weeks. Is the AI productivity boom, is it here?
I'm not sure if the productivity part is here yet, but the investment part is here. So we had a meeting with Jamie Dimon in November, and he essentially said, look, AI is going to be inflationary for banks as we try to figure out what the best use cases are in our business before it becomes a productivity boom. But either way, I think Wall Street is eyes wide open in terms of what AI can do for their business and how it can eventually make them more productive and more efficient.
Erica, let's talk about the politics. Danny mentioned David Solomon. He said there's been a meaningful shift in CEO confidence, particularly following the results of the U.S. election, a.k.a. Donald Trump winning. How much is all this bank exuberance and excitement for 2025 down to policy in Washington?
I think it's not just policy, but supervisory. So, you know, in terms of what's more difficult to easiest to change, there's legislation, there's policy, and there's supervisory. And what got us kind of excited about near-term changes is, like I was saying in another program, while we were all, you know, wrapping gifts and watching Love Actually on the 23rd and 24th of December.
John's favorite movie.
Matt said Die Hard. Mine too. The Fed essentially put out a press release after the market closed on December 23rd that they were going to try to make the stress test more transparent in response to the Chevron ruling, or otherwise known as Loper versus Raimondo. And the day after, the bank sued them in terms of trying to get more transparency for the stress test. And I'm telling you, you know, if we unlock capital or redefine excess capital for growth and for buybacks, that's really a game changer, because for the large banks especially, I've been on this program a lot talking about consolidation, but I think the market was saying, you know, it's not going to get worse under Trump for the large banks. We hadn't really considered that things could get better, and those were signposts to me that things could actually get better.
Well, transfer of power will happen Monday in Washington, D.C. I caught you earlier this week with Shanali, and you said that J.P. Morgan has the best bench in banking. Erica, when do you think they'll start to tap that bench?
So, you know, Jamie did say on Wednesday that he was probably going to be around for a couple of years. So that's probably the time horizon that we're looking at in terms of, you know, JP Morgan potentially announcing its successor.
What's a couple?
Who knows, right? I mean, Jamie could be around forever.
It's not 5 years anymore. It's a few.
It's not 5 years anymore, he says. But, you know, again, like, could it? Here's my personal thesis. Go to 270 Park and observe sort of, you know, how quickly they're finishing that building. You know, I'm not sure Jamie's going to leave until that building is all done and he cuts the ribbon.
Cut the ribbon, call it Diamond Tower, and call it an end. Erica, appreciate your time. Yes. Erica Najarian of UBS. Just for the record, Hallmark movie kind of guy. You know, like single private equity executive in the big city, goes to rural America to restructure a bakery, falls in love, never comes back.
That's why I said Love Actually was more your speed. I'm more of the Die Hard fan around Christmas.
Die Hard. Yeah. Like, I didn't actually get to watch Love Actually this time around. Next time.
I watched no Christmas movies. I think I might be, yeah, I think
something
about they're too melancholy for me. Like
I watched about 20 the month of December alone. Let's move on. What she said about Wells Fargo is important, by the way. Wells Fargo this week is up by close to 9%, the best week going back to 2023.
Yeah, people had written off this bank, especially when it comes to things like investment banking. A 59% increase in deal making in the fourth quarter, I think would have caught a lot of people by surprise. But Erica made a good point. This is a type of restructuring that they've been doing, which again begs the question, how much of these results are execution versus just a rising tide lifting all boats?
Erica's point, maybe it's not a single catalyst story anymore. Maybe things are changing. A bigger story for Wells Fargo. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg brief. Bloomberg is reporting that Rio Tinto and Glencore held early stage talks about a merger as recently as late last year. The talks are not currently active, and any transaction would face multiple hurdles, including antitrust scrutiny. Elsewhere, Bloomberg also reported